What if I told you you could get a copy of the Edge Finder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of Edge Finder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the Edge Finder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content.
Good morning, everybody. Welcome back. Happy, man, what is today? Today is Wednesday. Happy Wednesday. Gosh, it has been a crazy week on our side. We have been so busy, but busy is good, as they always say. Busy is better than bored, I guess. Anyways, hope you guys are doing well. We are still watching this silver short position. I've been doing something differently on social media here recently, and I don't know if I'm going to do it forever or if I'm going to stick it out, because there is some, oh gosh, what is going on with the hair today? There's some pros and cons to this, but I've been sharing a lot more about what I'm doing specifically in markets, and it candidly is kind of exhausting because there's so many kind of keyboard warriors in regards to, you should have done this, you could have done this, you're a dumb trader for this. I understand why not a lot of traders in the space do this, but I have been sharing a lot more about what I'm doing with my trades. And the thing is, I don't know. Okay, there we go. Okay, got to get the hair right, guys. Where was I? Yes, complaining. I think part of the reason that content seems to be interesting to my audience, like a lot of people have been saying they like that, which is awesome. It has a toll on it though, man. Like talking about your trades, you get so many people who weigh in. That was stupid. You shouldn't have done that. And of course, you know, I've done this for a really long time. Somebody commented on my YouTube channel and said they'd watched me for so long that I look old now. And, you know, just made me think for a second. I was like, you know, I have been streaming and public on YouTube since 2018, like every day of my life. It's kind of a crazy, like, not very many people have experienced that. So I'm not expecting people to be like, oh yeah, that is great. But like, it is very weird to have been in the public eye for like getting comments thrown at you for so long. And it doesn't really, like, it genuinely does not bother me, because I kind of try and roll with it, try and have fun with it. But I think I'm going to continue doing that content, although it is kind of taxing. It's taxing to talk about my trades, because at the end of the day, every trader, regardless of whether they show you their account or not, has losing streaks, drawdowns, etc. And somehow every trader on social media never has trades that go wrong, never has any drawdowns. And when they talk to you about their or what you should have done with their trades, they talk from a very, like, you know, told you so type of manner. But I'm going to keep doing it, because at the end of the day, I think that it is content that people resonate with. I think that it is something that I would have loved to see more often when I was trying to learn, to get genuine day-by-day plays of what is going on in markets for traders. Now, of course, I'll be sharing, you know, when I take the positions exactly inside of our Discord, as I always have. Full transparency there. But I'm going to be posting more often about like what's going on with my account, what's going right, what's going wrong. And to be honest, I'll just let the comments do what they want. They can criticize it, they can praise it. I don't really care. I'm not here to tell you what to do. I'm just doing what I'm doing. Anyways, I am short silver. So I've got a short position on silver. My trade so far is looking okay. I'm also long the dollar. Both of those plays are in the green for now. I have a stop loss on silver above this market structure point here. So if we break above 79, I will cut the trade for a small loss. And I know it's not a small amount of money, but it is a small, relative to the account size, it is a small risk. It's not a huge trade. But this is my second attempt on the precious metals. I took a short on gold that did not work out. So I'm back in this time on silver. I had an edge finder reading when I took this position a couple days back. We can just take a quick look here. If I go over to silver, silver's now at a -4. So we've gained a point back. So we're no longer in bear territory here, but we did get that bearish reading. The edge finder score over time reading here shows that we did dip into briefly getting a bearish reading. So I am watching this from this perspective. Nick, how do you trade everything? How is it possible? I don't trade everything. I trade macro. I trade macro, and I trade price action. I trade a lot of different things. I trade a lot of different currency pairs. I trade gold, silver, commodities like oil. I trade stocks. I trade international stocks. How could I possibly monitor all of these things? Well, I don't monitor these things. I monitor macro fundamentals. So, you know, again, some people like it, some people don't. They're like, oh, macro's silly, waste of time. Other people say that about price action. Other people, everybody has their thing, right? For me, macro fundamentals is the way. Okay. It's the way because it connects all markets. At the end of the day, if the economies of the world are hot, it's going to do something to the price of oil, and that's going to do something to the dollar. It's going to do something to central banks. If inflation is falling, if inflation is rising, this connects at the hip all markets. So trading macro instantly makes you an everything trader. And I love it that way. I wouldn't have it any other way. You know why I wouldn't have it any other way? Because if you designate yourself as I am a silver trader or I am a gold trader, of which I am both, I guess, instead of categorizing myself as I'm a gold trader, I'm a silver trader, to me, it's like I am a macro and sentiment trader. Like I trade what the crowd is. I trade against the crowd. I trade with the macro. I trade price action. Those things combined are what I trade. And so also I just thought about something. I might be able to make this text bigger and maybe not. I want to make this text bigger, but I don't know how to. Anyways, I trade macro because all markets react to it. Everything, crypto, bonds, commodities, indices, macros at the center of all of it. So anyways, I trade all markets, which means one of the nice things about trading all markets is that, you know what, when I have an idea, I can go find the market I think is most resonant to that thesis. So right now, I love having this little thing, but it also gets in my way. Right now I see upside in the dollar. I see Edgefinder score giving me a +5. Now, if you don't know what Edgefinder score is just a screener that looks at a bunch of stuff. It looks at macro fundamentals. It looks at inflation, jobs market data, economic data, and it builds us a bias on an automated fashion. By the way, let's just take a look. I didn't even react to ADP this morning. Did we get ADP numbers? We did. So ADP came in pretty much in line with expectations, 122,000 jobs added to the U.S. economy versus forecasts of 118,000. This is up from the previous, but still kind of a, you know, so-so number. It's very much not super impressive. I think the number to watch today, guys, is going to be your ISM services PMI. You know, someone pointed out on my Instagram that services PMI is, and this is true, we talk about it all the time, but services PMI is the more important indicator for the US because of how much the US economy is a services-based economy. You know, we build all these digital products and software and all this stuff, right? So services is going to be an important indicator here this morning, as it is a forward-looking indicator on how the economy is looking in the eyes of people within the services part of the economy. It asks a bunch of purchasing managers, a bunch of executives, decision makers, hey, what do you think about what do you think about your business? What do you think about the economy? How are your orders coming in? What are your hiring needs, etc.? And gives us a forward-looking indicator. I love the PMIs for that exact reason. Anyways, with silver, if you have a stronger PMI number, that's going to be good for my position because I am betting that silver, I think, will go down. From a price action perspective this morning, I am looking for silver to potentially break through this little, let me see if I get a horizontal line, this little level here, right? So you're teetering on potentially breaking beneath 74. The next level from there is obviously a move back down to these prior lows, if we can get it, to 71.8. Trading without macro is like being in a rudderless ship. I personally couldn't trade without it, and professionals I learned from don't click until the macro makes sense. Love it. Love it. Macro is, again, it's not good for timing. And that is the distinction, right? Macro is excellent for general directional bias. Technicals are nice for timing of the entries and exits. And to your point, Lee, you got to have both. You got to have both, right? Because if you get the direction right, but the timing wrong, it's no good. If you get the direction wrong, but you keep trying to time the entry, you're definitely going to be wrong, right? So the combination of a sweet spot on macro fundamentals for directional bias and price action marrying up is kind of what I'm looking for. Anyways, for silver, if we can break through these levels here, if we can get through these lows, I'm definitely going to be looking to lock in something on my trade. Until then, I'll probably just sit tight and see what this thing wants to do. Ideally, if we can get a flush, break through those lows, that would give me an opportunity to start taking my stop loss, which is still up here, and start dropping it in to profit. So we'll see. We will see. Dollar index pushing on up here. I also have a DXY or a UUP position. Let me see if I can pull that up. Switch my P&L. There it is. It's a UUP is just such a the dollar. I mean, naturally, currencies just move a whole lot less. Like this is a much bigger position than my SLV capital allocation. However, it just moves a lot less. DXY, UUP, they just on a percentage basis don't move very much. Anyways, I'm looking for the dollar index to break these highs. It looks promising. I mean, once again, you had kind of your fake out here. Sellers look like they're going to take it, and then boom. And this candle, I mean, these were strong rebounding candles. You had a really big sell-off, strong close there on the 4-hour, wicked lower, rejected, actually bounced off of the breakout point, and is now at the top of the range. Once again, we're staring down the barrel of a possible breakout in the dollar index. However, we've been here before multiple times on both sides where price gets here and then we get the fade. So are we going to see dollar index see the pop and break? What I'd be looking for today would be this type of move in, the next couple hours. If you get a strong PMI number, for example, that could maybe get us there. And then any sort of fade to me continues to look like a bullish opportunity. Just my personal opinion, not financial advice. By the way, we got a new green. My goodness, it's a green day. We got a green banner. Look at this 8-cap free edge finder ad that they've got all over our stream. This is awesome. So this is, just so you know, this is like such a cool offer. If you don't have edge finder and you've like been thinking about getting it, a lot of people don't even realize that we have this offer. You can actually get it completely free, like bought and paid for you. You don't have to pay a dime with our sponsor, 8-cap. It played at the intro of this stream, but if you guys are interested in exploring that offer, here it is. The link is in the chat right there. Beautiful. Or you can just scan the QR code that you see on your screen right now. But 8-cap has a relationship with us where if you create an account with them, using that specific link. All the terms and conditions and disclaimers and stuff can be found on that page. Please take your time, do your due diligence. If you're interested, essentially on that page, you'll see that they will buy a copy of Edgefinder if you meet certain deposit requirements. We've had a lot of people do that over the years, and it's been a great opportunity because it gives you the chance to get a copy of Edgefinder completely free. We'll watch dollar here as, again, it is testing this 99.4 level. You've got gold and silver moving lower here this morning. I do think dollar wants to see 100 again and continue on up. We'll see if it does. We'll see if it does. I think if you're going to see dollar, like I can see dollar to 100 being fairly, like DXY to 100 being fairly easy. Where I start to wonder, what gets you to 102? Well, from 100, okay, I think that's just kind of like playing into this range. Like, I don't think that's crazy. What I think is crazier is 102 plus. What gets you there? And I think if we look at the current mapping of US dollar, right? Fundamentals are a +3 because inflation is riding high. Economic growth, kind of neutral. Jobs market neutral. You get those things to flip into bull territory, that's, I think, what would get you up to 102. Meaning, inflation is stubborn, rising. And at the same time, if you start getting some uptick in the economy, because right now the economy, there's some mixed signals for sure. Consumers are hurting. There is clear evidence of that. The consumer confidence number is still, although it did come in better than expected recently, it's still low at 93. Consumer confidence is at a low point. Like, let me show you that really quick because I like looking at that indicator. If I go consumer confidence under economic growth, consumer confidence, right? So this is a pretty interesting indicator. Consumer confidence over time, oil to 160 gets you there. Yeah, that's fair. That's totally fair. So that is totally fair. The geopolitics shock could get you there too. But I'm talking from like a structural, just like from the macro side, decently strong jobs, high inflation, and growth ticking up would potentially get you there. And, you know, this consumer confidence number has been better than expected 4 times in a row, but still low. Like, that's the full context. I think it's important that we take a look here at both absolute location of the consumer confidence indicator as well as relative to expectations. Relative to expectations, consumers have been like not doing well, but they've been holding it together relative to expectations. Okay. Consumer confidence as an absolute number is still very low, like very, very low. Like, let's back this up 5 years. Consumers have just been slowly withered away, beaten down. And who in the world is to blame them? We all know why. Gas prices are higher. Jobs have been slowing for like the last 5 years. You know, government spending is out of control, which is part of the reason inflation is going on. You have households needing to have 2 incomes. Once upon a time, you could live off of 1 income and that, you know, the second one was optional. Not anymore. In today's world, it is like everyone's got to work. Everything's expensive. It's a challenging environment out there for people. And so consumer confidence has naturally drifted lower over time. It's kind of a jarring thing when you look at that and then you look at the stock market. And the stock market is like absolutely touting wins after wins after wins. Like, it's just crazy. Anyways, why? Well, we've said it over and over. AI, right? AI data center stuff is, I think I did a decent job yesterday. I explained it a way that I liked it yesterday in my video when I talked about markets. Sometimes people are saying like the stock market's just ignoring what's happening in Iran. It's not. It's just paying more attention to the data center and AI hype and these new IPOs for OpenAI. I don't know if you guys are familiar. OpenAI, that's ChatGPT. It's going public soon. SpaceX, these big, huge, the biggest IPOs we've ever seen are going on. And people are hyped about it. Granted, I personally kind of get nervous with that sort of thing when everybody's so hyped up about SpaceX launching, or OpenAI, and they're talking about just racing to get to public markets so they can get the bid. And it makes me genuinely, it does kind of make me nervous. Like I feel like those are the sorts of things you see at market tops when you get just like so much euphoria. And you know, it's so hyper concentrated, right? This move is pull up the RSP. RSP is the equal weighted S&P 500 index, and it's doing well, but look at it compared to semiconductors and the Nasdaq specifically. Look at the difference. Nasdaq is almost 18% above its prior all-time highs. Equal weight, the S&P 500, it is up about 1.85% above its prior all-time highs. Why am I telling you that? Well, because that is telling you that the rally here in stocks is pretty narrow. Like there's a group of stocks that are just eating all the gains and everyone else is doing so-so. I mean, just real quick, let's do a sector check, right? Let's do a sector checklist here. Go with me here on this. Energy stocks, they've done well because, of course, the Iran stuff. Here's communication services, not doing super hot. Here's consumer staples, right? Walmart's, Costco's. Actually, I don't even know if Walmart is consumer staples anymore. It might be discretionary. Anyways, look at this. Financials down. Utilities down. Consumer discretionary, obviously down. The consumer's been struggling, so it's sideways to down. Real estate, kind of up. Regional banks, software's rebounding. Industrials, right? Industrials are doing pretty well. They're a beneficiary of the AI stuff because they're building all the data centers. Huge industrial complex stuff. Tech stocks. Healthcare down. Basic materials holding up, again, kind of a beneficiary to a degree with the whole data center build out. You need raw materials. Semiconductors, absolutely monstrous. So I'm showing you this because you see the stock market itself up tremendously, but not all stocks are up. I showed you most of those sectors are flat to down. So some sectors are in recession already. I think it's just, I mean, kind of yes, but like also just, you just have a very odd situation because when we look at like consumer confidence down, that's hurting a lot of stocks, right? And when we look at the S&P 500 within Edgefinder, fundamental score getting a -3, inflation is hurting a lot of stocks. So my point with showing you that is that if you just look at the index, it can be a bit misleading. And the other thing that I will caution you on is that people who are resolving to buy index funds, it's the only way to win. Trust me when I say it's the only way to win looking backwards. However, they are becoming increasingly concentrated. It's all tech now. So when you buy the index, you're just buying tech practically. It's like a giant group is tech and then tech adjacents. So you're buying tech stocks. And if the top end, the tech stuff starts to take a real hit, the index will get cratered. And there's the potential for some of those other sectors to actually do quite well, or at least hold up okay, relatively speaking. Anyways, just an update here. Silver, like I said, I am still short silver. I'm going to just pull up my my position. I'm going to play with this little widget that I've got here, see if I can get it to be bigger text. But for now, I'm still in the silver short position. This trade, again, was kind of an Edgefinder idea that I had come across my desk the other day. I'm still in the position and going to monitor it from here. I indicated earlier that if you get a break through these lows, I'll be looking to probably trail my stop loss behind market structure. Nick, it's difficult to imagine the drive for AI slowing, so the gap between the tech markets and the rest of the economy will only widen. Yeah, Lee, I mean, I think it will until it won't. That's my honest opinion on it. Is I love tech stocks. I love software companies. I run a software company. I'm a believer in AI, but I'm also open-minded to the idea that I think you have to be careful when you get so much hype driving into markets in one spot. I don't, I don't want to sound like just a bear on it because I love the technology. I just think like semiconductors. Here's my honest take on semiconductors. I think they're not a good risk reward bet here personally. Again, not financial advice. But they would be a good risk reward if they were down at 400, the SMH. And I know that's like a world away now. But understand, semiconductors, if you've been around the block for a minute, then you know semiconductors are notorious for booms and busts. They absolutely crash in downturns, and they absolutely rip in bull times. Just for context, semiconductors are not new. Let's see if we can scroll back on how far back. Yeah, so we can go take a look at like your 2000s, right? Semiconductors dropped by 80%. If we go to 2008, I mean, by 2008, they had not recovered and they crashed another 62%. So semiconductors are very, very, very cyclical. They're in the sweet spot right now. They look invincible right now. So I'm just cautious on them. Again, wonderful gains for people who have had them. Am I jealous? Absolutely. Absolutely. I wish I was long semiconductors. I'd be trailing a stop on this baby and I would be totally annoying about it. Everybody would be like, Nick, you won't stop talking about your semiconductors trade. And you're right. That is what I would be doing. I would be annoying with it. However, I would also acknowledge, just like I did with my gold trade, when I had that crazy gold trade last January, this January, I talked about it a lot, but even as it was happening, I was like, this is not sustainable. I'm just going to keep trailing stops. Eventually it will fall back down. And it did. It just took a lot longer than I thought it would. And I just kept trailing a stop. Because you never know with these things. When you get a semiconductor SMH run up like this, you have no idea how long it wants to run. It could do this for another month, 2 months. It could keep doing it. So I don't want to try and like call that top. But if it does come to an end, I think it can come to an end very violently as well. I just think the volatility is really really crazy. Sound keep cutting off. Are you having sound issues? What's wrong with the sound? Is there any sound issues? Anybody else having sound issues? Anyways, let me just check here. Haven't heard anything, says producer. Okay. All right. Thanks, guys. Thank you, guys. Yeah. So anyways, today we have the PMI numbers coming out. I'm interested to see how that takes place. Manufacturing PMIs came in better than expected. So my score here got a little bit better for indices. PMIs today, if they came in better than expected, that would be good for my silver short. Also would strengthen the case for dollar strength or dollar bullishness. This and the big one here this week, guys, is also going to, of course, be ADP was better than expected, I believe, right? So that's going to boost score on Edgefinder too for dollar. Yeah. Yeah. So we had better than expected ADP numbers. So when this updates, it will also be stronger for the silver trade and for the dollar trade. Nice move on silver, Nick. Thank you. Thank you. We'll see. We'll see. I mean, it's too early because the thing with my strategy is that you never ever can count your winnings before they get realized with my style of trading, because if that happens, I walk away with a loss. It could happen. I've done this for long enough to realize that like I kind of take a we'll see approach whenever I have a trade on. Like we'll see. Because for me, I have a low win rate. And I realize this is kind of the downside with sharing my trades often on the internet is I have a very low win rate with my strategy, which is not very pretty for social media. Because if you have a low win rate, like obviously on social media, everyone wants to see winners every day. My strategy just doesn't have that. Like my strategy is low win rate, but when it's really right, you can have 10 Rs, 5 Rs, 6 Rs, like 10 times my risk. On the gold trade, I think it was legitimately like 11 or 12 plus R. I can't even remember. It was insane. But those are rare. And so I have to keep showing up to find them. Hey, does A1 still live stream on Twitch? We should be live on Twitch. We should be live on Twitch. Let me just, by the way, guys, can I just say the website, you guys about to be blown away. The website, we are dropping so many free tools. I cannot contain my excitement. Hint, you will never need to pay for any sort of calculator, risk calculator. We are going to be dropping like a full grade premium version of all sorts of like risk calculators for prop firm traders, for futures traders, Forex traders, stock traders. We've got awesome tools coming to the site completely free. If you're not using the website, bro, lock in. Get on a1trading.com. Like we've got so many good tools coming for the community on here. Totally free. Like all of it is free. We also have brokers and prop firms. If you want to support us, use one of our brokers, use one of our prop firms. If you like what you see over there, use promo codes, etc. It is a great way to free support A1 Trading, keep our show on the air, keep doing what we're doing here every single day. You know, stuff is not free to run. We rely on sponsors. We rely on, you know, the products that the premium versions of our products that we sell. That is how we continue the operation here every day for free content. Me too. So can I show you guys, can I show you a teaser? So Julie, she does, she is our marketing head. She is working on like a new, just as an example, she's like working on like a new menu for the site. And we're going to have like tons of free tools in there. Like you can't see this yet because it's not ready. But when it goes live, bro, can I time travel and give myself all the tools that we have today when I was trying to start trading? Like it would be amazing. Can someone tell me if we live stream still on? Yes, we still live stream on Twitch. You should see it. But yeah, these tools sound exciting. Yeah, I mean, our goal is to drop just a wall of free helpful tools for traders. Because candidly, why would you do that? Why would you offer it all for free? Well, because we would then get more traffic. Like we want more traffic, we want more exposure, and candidly, full transparency. Again, we are a advertising agency. Essentially, we offer sponsors, slots on our show, slots on our website, etc. So we want more traffic, and so you guys get free stuff. And if you choose to help us out by using a sponsor of our website or our channels, then like you are a real one, low key, for helping us out. And it's to no cost to you, right? If you use like one of our sponsors, like if you're thinking about like, do me a favor, person to person, genuinely, if you're like someone, we have people who never buy anything from us, totally cool. But if you ever are thinking about using a prop firm or signing up with a broker, of course, you do your due diligence, make sure it's right for you, but take a second, head over to our website and consider using one of our sponsors. Consider it. If you use it, person to person, thank you. Appreciate you. Like genuinely, that is awesome. But you don't have to. But you should. We'll see. Silver, look at this. Silver catching a little bit of a bounce here. Oil's been the other chart to keep an eye on. Low key, didn't know bro was chill like that. Oil's been a key chart here because when oil drives higher like this, it immediately sends the dollar, like the dollar, oil, and commodities, like they're all moving in lockstep. You get a little bump to the dollar going on like this, and boom, suddenly, oil's also up. I'm curious what happens with Bitcoin, guys. My friend in the industry, Sam KB. Does anybody know Sam KB? Sam made a post. I got to shout him out because he was talking on his Twitter about his drawdowns he's experiencing in crypto. And he was being like super specific. He was like, I'm going through this drawdown. I have this percentage down. It's been painful to watch stocks rally, commodities rally, and I've been stuck in Bitcoin or stuck in altcoins and Bitcoin. And I just thought it was really commendable because I commented on his tweet because I was like, dude, like almost everyone goes through something like that where they make a really difficult, a bad trade or a bad investment or whatever. And maybe long-term he'll be right. I'm just pointing out, like, a lot of people go through that and they never say a word about it and they act like they're invincible with trading and they never make a mistake. Sam, shout out to him, did the opposite. He actually addressed like, hey, I'm struggling with this drawdown. I'm dealing with this drawdown. Here's what I've been doing. And I think that level of transparency is just so powerful and important in the trading space. Because again, you get a bunch of know-it-alls all over social media about how good they are at trading, how they never make a mistake, because they choose what they want to upload. They choose their photo roll. They go to their photo reel of like what they want to upload, and they skip all the stuff that doesn't look good, and they just post the stuff that looks good. That's the trading industry in a nutshell. It's a bunch of window dressing. So anytime I see somebody who is trying to do what I'm trying to do, which is be real with it, I think it's awesome. So shout out Sam. That's cool. Yeah, I had altcoins for some time. Now I'm scared to look. Yeah, I never got into the altcoin stuff. I have never really been a crypto person. I have traded it many times, but I'm not a crypto hodler. Although if there comes a point where like I think the economy is going to turn up and I think inflation's going to come down or something like that, then crypto might be a really nice position trade to gain like extra leverage without paying for leverage, if that makes sense. Because Bitcoin just has so much vol in it, like it moves so much. However, to counteract my own point there, Bitcoin and Nasdaq have like completely decoupled. Like this is the icing and the cherry on top of the icing on top of the cake for pain for the crypto crowd. This would be bad enough, right? This would be bad enough for the crypto crowd if the stock market was down 15%, 20%. What is an absolute slap in the face is Bitcoin down 50%, Nasdaq like up 50%. Like that is, what is this from last year? 87% gains from the lows. What is it on Bitcoin? I mean, I guess you might be, yeah, from all of the rally, all of the post-tariff like run up on everything, Bitcoin's down 12%. Like that is the pain point. Not only is it bad performance in absolute basis, it's absolutely terrible performance relative to the index, which is just a gut wrencher. So I don't know. Crypto's hard for me because I just don't see it as, it's not a yielding thing. It's not a company that has profits. It's not a real tangible item that people can use like precious metals, industrial metals. So I've just always struggled with it, but I love trading it. So we'll see. I narrowly missed a short trade on Bitcoin that I've been complaining about the last week. I narrowly missed this trade here. I did have, I don't know if I still do, but I did have a bearish reading on Bitcoin. Yeah, you can see like we were bearish Bitcoin mid-May and late May. Now the score has kind of backed off to a neutral one. So which was worse, FTX or now? Man, I would argue now. Like obviously crypto has seen bigger drawdowns than this, but relative to the Nasdaq, getting smashed by the Nas this bad is absolutely abysmal. It's terrible. Because again, crypto is supposed to be the alpha generator. Like that's the thesis. The thesis is if stocks have a good run, crypto should be a beast, right? That's the theory for a lot of like investors, traders who watch it. It's almost like Wall Street got a hang of it and it lost its retail magic. So I don't know. I don't have any sort of long-term big predictions for crypto. I genuinely don't. It's getting adopted more and more, but you know, so are credit card companies. Like everything's kind of going up. I don't know. I'm cautious on it. Like clearly I'm not a huge believer in it, but we'll see. I could be swindled into the crypto crowd. I don't know. I just would need to see relative performance come back. That's a big thing. Dollar yen we talked about yesterday. Let's see what's going on with the yen here today. Any yen weakness? Yep, yen weakness continuing. Dollar yen looking like it still is getting magnetized back up to this 160 level. I actually want to buy this thing over 160. As crazy as that sounds, I think that I think you continue higher with dollar yen. At least right now, it seems like dollar yen wants to keep pushing it. I do like the dollar, as I've proclaimed 1,000 times in the last week. And I do still think indices are due for a pullback, but you know, wind back, click play on every other video for the last month and you'll hear me say that. I don't have any short positions on, but I do think that stocks are due for a pullback. For what reason? I think they're decoupling from the reason I think stocks are going to pull back is not because they've run hot. I mean, that's part of it. Like a little bit of it is like, okay, stocks have run really hard, probably going to see some kind of technical pullback. That's a piece of it. But larger is inflation and yields on the rise, strong dollar, oil is sticky and moving higher again. You know, 6-7 type of thing. Okay. I do think oil, someone said it earlier, like what gets dollar to break to 102? Oil, right? Could get you there quickly. But from a sustained basis, like what could get you a grind up to 102 in the dollar? Oh, by the way, look at dollar here. We're trying here. We are absolutely trying. What gets you to 102 on the dollar? Probably jobs data picking up, inflation picking up, and we look at a 2022 type environment. I gotta say, that's what it feels like we are trudging towards, is a 2022 dollar type environment, to maybe a lesser extreme. 2022, you had such an extreme run up in inflation, but I have to say it. I don't want it to happen. Like I hope that it doesn't. But if geopolitics like flare up tremendously, you could get a 2022 type inflation run. Like it's very possible because Strait of Hormuz is so critical. They're also talking about targeting that other strait where another like 10% or whatever of global oil supply flows through. Like you have a serious contention point where oil could do one of these guys and just shock the world just when it kind of felt comfortable again. I think Iran is still on their same agenda. They've been entertaining this is total speculation on my part and not something I would base a trade off of, by the way. But I think the speculation is Iran is sort of like playing the time game. They know that inflation is going to keep rising. They know that midterm elections are coming around. They know that this is an unpopular circumstance for the White House right now. And I think they're going to play time, right? They're going to play time. They're going to let this is actually, never mind. I'm not going to say that. CSGO, sometimes you play time anyways. Point being, I think that the dollar index could also see a sharp rise. Like if you want to talk about 102 in a very big hurry, it would be some sort of shock to the oil situation. Because that's what got us real quick previously. Like look at, and then I got to throw the show over to Alan here. Like you can see how quickly the dollar can rise in a circumstance like that. This is just like snapshot this little piece of price action. Whoops, let me try that again. See what I'm saying? Like that's geopolitics in action for the dollar. It can be very violent and very quick. Anyways, that's going to be it for me, guys. By the way, if you want to try out Edge Finder, we'll drop a link here in the chat to where you can sign up for a trial. We've had a lot of people trying out the Edge Finder recently, and also we have a free course that comes with it. If you don't have Edge Finder and you're just interested in exploring it, you can head over to our website. It's a1trading.com, or click this link that just got dropped in the chat to sign up for a trial. With that trial comes a free course, like an actual free course on fundamental analysis and how to tie it in with your Edge Finder. So even if you don't buy Edge Finder, fill out that link so that you get information for free on how to trade fundamentals with our free course. Guys, up next, we have Alan Perez taking over the stream, talking about trading setups today. I believe he's also watching the dollar. So let's cheer him on as he comes on. Let's see if we get some DXY to the upside today for the good old A1 trading team. With that said, up next, Alan Perez. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Good afternoon, good evening, wherever you are watching in the world. Hope you guys are doing great here. Yes, so I am watching the dollar. The position that I'm in right here, short euro dollar, is actually working out quite well. And guys, if you see here on the right-hand side, you can see that I have some new tickers on my chart. FTMO prop, FTMO indices, and commodities. So I have started a funded challenge. So I essentially took the Eurodollar trade that I'm in on my live brokerage account here. And I'm going to be sharing the performance with you guys on this challenge. So we'll see how it works out. But yeah, pretty cool. I know a lot of attention is going in that direction. So I thought, why not, do that alongside of my trading, but also too, right, benefit from the higher capital potential there. So short euro dollar there. I am watching the dollar index. So let's go ahead and switch back to that DXY chart there. You can see here that this 99.5 level of resistance, it has held a good amount of times here. We are now testing that level again. Let's see how many times we have flirted with this level for about 20 days now. 20 days we have creeped up to here and have failed this level here. So we'll go ahead and see how that develops there. But I do think that the dollar index is positioned to go higher relative to other currencies, right? So I think the dollar is actually doing quite well. We'll go ahead and see what happens. If you do get the break and retest, and I would just be trailing my stop losses here. And then my next target would be 100.5. Dollar has been doing quite well. Let's go to the top status page here. You can see that dollar isolated here. The dollar futures is getting a bullish reading of 5, which is starting to pick up now. It was bullish before, then the score fell off, and now it is bullish again. So I love to see that. Let's go to the U.S. economic heat map. You can see here that manufacturing PMIs beat, right? Services PMI coming out later today. We'll see how that comes in line, but analysts do expect some kind of a beat from, or a rise from last week's or last month's number there. We do have CPI elevated, right? Inflation elevated as a whole. CPI 3.8 versus 3.7, so that's good for the dollar. PPI 6% versus 4.9, that's good for the dollar. PCE came in line, so that's going to be neutral there. And then when you get to the employment stuff, you do have JOLTS yesterday that beat expectations, and then you had I think it was ADP this morning, was just not updated yet. ADP slight beat there. So we'll go ahead and see. Now, the big thing is going to be NFP and unemployment rate later this week on Friday. So we'll go ahead and see how that comes out. But it seems like you can get a scenario where you do get the dollar beat on all fronts. So we'll go ahead and see, right? So I'm kind of positioned that way. So your dollar to the downside, dollar index to the upside is kind of what I'm looking for. And so I have this on my live trading account that I've been in, and then I just added it freshly to the prop account here, up about um, $800 or so. So yeah, kind of what I'm doing here. Um, Barron Trump coming to the rescue. I don't know where that came from. Ball out. Maybe you know something I don't. Bashy, good luck. Risk small. Yes, yes. So I'm going to be treating this like any other trading account. Like this is going to be, I'm not going to be shooting from the hip, or it's not going to be the Wild West, right? I'm not going to try to flip this account. It's going to be just, regular trading. In fact, I created this here. This essentially is a dashboard that I can use because the risk parameters on prop firms are so tight and so strict that I created this right here. And so essentially, right, like this is the outstanding risk that I have right now. For example, the stop loss is about $2,000 on this trade that I'm in euro dollar, right? So I'm going to delete this. I'm going to delete this. I'm going to delete this. Let me just show you guys, right? Because you kind of need this. So for prop, you have a daily loss limit and a max loss limit, right? So I'm trying to be, now I don't want to get to right on the needle right there by the daily loss limit, because then you have no room to recover. So I have, if I get within 20 or 80% of the loss limit there, then it's going to reject this order. So let's say this is the current trade I have on the prop account, euro dollar sell. My stop loss, worst case scenario, if it gets hit, is $2,000, right? So that's how much risk I have on the table. If I want to take a new trade, right, and it's going to automatically reject it if I don't have any stop loss. So let's say I place a new trade. Let's go, I don't know, dollar CAD long, right? We're going to do dollar CAD long. And my stop loss, if it gets hit, which is the worst case scenario, is going to be $2,000, right? Again, it's going to fail because I'm getting close to that daily loss limit right there, right? So I'm going to have to adjust my risk accordingly so that I can get accepted. And then, I do it like this, $1,000 stop loss approved. I can go ahead and enter the trade and still be within the risk parameters. So that's kind of what I'm doing there for the prop, because I do know that the rules are kind of tight there. So yeah, and also this is a swing trading account, so I should be able to hold over news, hold over the weekend, no problem, just like my regular trading. So yeah, 100K account, 200K account. It's an FTMO 200. Job data on Friday for CAD as well. Yes, Lucky, that is completely right. So we have unemployment, NFP for the US, and I think we do have unemployment as well for CAD. Am I watching New Zealand CAD? Let's go ahead and look at New Zealand CAD. So let's go to here, New Zealand CAD. Let's see what it's looking like. Oh, wow. So we did, we did get that pop, right? When you got that hawkish RBA surprise. Or not RBA, RBNZ surprise. Creeped up to here. Wow, this is a chart I haven't looked at in forever because these are my old zones in gray. Okay, so let's go ahead and look at Kiwi CAD. Look at the Edge Finder first, guys. Let me look at the Edge Finder first. By the way, the tool that I use, the tool that I reference a lot on the live stream, is going to be the Edge Finder. It just helps you really filter out good positions versus bad opportunities, helps you avoid unnecessary losses, and it includes the fundamentals and sentiment into it. And I would argue that it makes it as easy as, or it makes fundamentals as easy as technicals. That's what I would say. I don't know if you guys agree in the chat, but if you really want to dumb it down, all you have to do is just go to this tab, top setups page, look for something bullish or bearish, and then match a chart, right? Like it's really that simple sometimes. So let's look at Kiwi CAD. And by the way, the link will be dropped there for the Edge Finder here in the chat as well. So we can go ahead, if you want to get a copy of that, definitely feel free to do so. I promise you that it would help your trading. So let's go to Kiwi CAD. Let me just search it up here for you guys. Kiwi CAD. It's getting a bullish reading, actually. So I was kind of thinking through the lens of shorting this, but it's actually getting a bullish reading. So if that's the case, then I would do something like, let me see, a pullback. Man, I would prefer like a pullback to that 200-day moving average, right? I'm seeing something like this happening, like some kind of a bullish upward structure, right? So if you get a pullback or a retest to this level here, you can see that this upward trend line lines up with that 200-day moving average. If you were to get that, with the, still getting that bullish reading from Edgefinder, I think that would be a great play. For those, that don't know, a lot of central banks are starting to voice their opinions or their stances on how to navigate this higher inflation environment, right? Because of the war in the Middle East. And so recently, the World Bank of New Zealand actually surprised the market, and they were actually more hawkish than anticipated. So one thing to note, right? So that caused this extreme surprise to the upside there, the Kiwi dollar. Now we are getting some softness, right? We did have a very one directional move. And so usually when that happens, you do get some kind of a mean reversion or some kind of retracement. And so I think if you were to get a retracement on this pair to the upside, I think would be a good bet, right? So Kiwi dollar or Kiwi cat, I'm sorry, is going to be a bullish reading on Edgefinder. So I'm going to actually put an alert right around here, and I'm going to add that to my radar. So something to look out for. The Canadian dollar basket too has just been weakening, right? So I do want to continue playing that momentum, and I think Kiwi cat is actually a good one. So thank you, chat, for that recommendation there. I'm glad I have that on my radar now. Let's go ahead and see what's going on there in the chat as well. Do 0.5% per trade and max overall exposure. Yes, Bashy. So Bashy, I'm actually doing 1.5% overall exposure. So I'm being a little bit even more conservative. But yeah, definitely, I'm trying to go ahead and be responsible here with this account. Let's see. You bought Aussie Kiwi. I have closed in deep profits. Awesome. Yeah, Aussie Kiwi bounced. So Aussie Kiwi dropped dramatically on that surprise from RBNZ, and it has since found some support here. So fantastic, right? I do think if you get to this level of resistance here, this could be profit taking. I was actually thinking of if you continue to see that hawkish narrative from RBNZ, a short position, right? Re-entering this trade to the downside could actually be wise too. And you do got that 61.8% retracement level right up there. So I'll probably be waiting for that, see how the price action reacts to that level. If you do get a hold off of this level and price action starts to, go the opposite direction there to the downside, I may be looking to participate in Aussie Kiwi to the downside, but we'll see. It's too early for now. Let me see what the Edgefinder is showing for that one as well. Yeah, it's still getting a bearish rating, so that's still in play. So what I'll do, in fact, is I'll put an alert at the 61.8, and then I'll reevaluate if we were to get there. So let's go to 61.8. We'll put an alert right there. And yeah, there we go. Lots of opportunities, I think, in FX world is happening right now. Lots of opportunities. And a lot of it is due to central banks. Like I mentioned earlier, central banks have to start voicing or navigating this environment. Who's going to be more aggressive? Who's going to be more lax, right? Things like that, things that you have to look for. The U.S., for example, their base cases they're going to hold for a long time, right? So that's going to keep the U.S. elevated or, with that higher yield advantage. And then you have, like RBNZ that there's, they're flipping super hawkish, right? So that's kind of what I'm looking at right now. Hey, Marco.
Hello.
How you doing, man?
I'm doing pretty well. So I'm the producer for today. I think James had to step out of the office for a bit, but I think everything is working as it should be, right?
Yes, sir. Yes, sir.
Okay, awesome. So, how are you? How's your position doing?
Pretty good. Euro dollar is starting to trade lower here. Let's go to DXY where I can best illustrate this. I'm hoping for that breakout in DXY to the upside. That's going to be mirrored to euro dollar to the downside. So if we do get that breakout, then I would just be trailing my stops there, and then hopefully, right, we can target something like 100.5. That's kind of what I'm looking for.
Yep. I'm in the same boat. So yesterday I sold GU. I think GU is a good pick alongside euro dollar, but for GU especially, I think there is some political turmoil. So you have the Comrade Keir prime minister. He doesn't want to step down. The people living in the UK are definitely not satisfied with the current situation. So we may get even more of a sort of dissatisfaction, which could hurt the British pound. So if I put up my screen, let's go to remove, add to stage, and we go to GU. So this is the trade that I have, but basically the last time we had political turmoil in the UK was in 2022. And that thing happened, I think, in July 2022. and it lasted for a couple of months. So if this is going to be a similar case, I think some GU weakness could happen, or more GU weakness could happen. And of course, the trade is mostly based on the dollar. The dollar, if I'm being honest, on the possible strength of the US dollar. Is your euro dollar position mostly based on the dollar or the euro?
The dollar.
Okay.
Mhm.
Cool.
Yeah, that's kind of the big thing is I mean also to some euro, right? So I Nick did this new thing. I'm gonna flaunt this real quick. Let's go to interest rates data. Yesterday I was kind of trying to articulate like my thought process when like speaking on central banks, who's where, what happens if one cuts or the other. So let's go to interest rates tab and we're gonna pull up the euro and the US dollar. And this is kind of where interest rates are at right now, right? So let's say, for example, that in Europe, in the Eurozone, they want to raise their interest rates, right? There's about 160 bips of gap between the US and the Eurozone right now. So they would have to raise a whole point and a half and some change just to catch up to us, to the US, as far as rates go. And that's if the US stays flat. The US is not looking to stay flat. Right now, there's a chance, there's a likelihood that we go up too as well. So if Europe, if the US is right here and Europe is right here, Europe moves, but then we also move. Nothing has changed, right? As far as the rate differential goes. And so this chart really helps illustrate that, is that, I do think that in the medium to long term, even if Europe raises and we stay on hold, euro dollar is still positioned to go lower, right? So I'm just looking at it from that lens too. Now you throw in the fact that, we had manufacturing PMIs in the US do well. We had ADP this morning slightly beat expectations. We had what was it, unemployment claims or something like that earlier this week as well that beat expectations, or job openings that beat expectations. So we're doing okay on the employment side. We'll see how good we are doing on the growth side today with ISM services, which is the bigger component of what makes up that GDP number. If that comes out well, then you have the US with decent growth or good growth, decent employment, and hotter inflation, which is a really good environment. So we'll have to also see what happens with NFP and unemployment rate later on Friday as well, right? That could definitely, move the picture a little bit. But there's a chance that you do get kind of all stars aligned there for the US dollar. And I think that's why you're seeing the dollar just on top, right? You're seeing Aussie dollar lower, euro dollar lower, pound dollar lower. Now, the pound dollar has a very unique situation where you also have another layer, which is that political uncertainty, which definitely that instability does pressure the domestic currency at hand. Kiwi dollar lower as well. So I think it's a good picture for the dollar, in my personal opinion.
Yeah, I would absolutely agree. So I think it's kind of also a popular trade, but I think it could work. I know like Nick has the same idea. I think Nick is long on the DXY and he's also short on GU. He's also long bond yields, if I'm not mistaken, or he was long bond yields. And also like a couple of other guys that I'm following are also long on the dollar. So the bet is NFP comes out pretty good. So essentially the numbers come out that the jobs market is doing well. Then you get the inflation print that comes out maybe hot, maybe even harder than expected. And then finally the nail in the coffin would be Warsh coming in and saying, look, inflation is getting a little bit out of control and we're going to maybe need to do something in the future, but it's definitely going to be a pivot from cuts to hikes.
Yeah, and I do like, now I don't like to trade the pound for my own personal reasons, but I do like the idea too that you do have that political instability. Like my biggest trade ever in my whole trading has been shorting the euro in 2024 of summer when France had the snap election, right? And that just the euro was already positioned to go lower. That just added extra fuel, and it was just an insane day. So I like that. I like what that's going for the pound. Do you have a specific target in mind for the pound dollar? I kind of have 1.32.
Same thing.
Okay.
Probably the bottom of this big range is where I think we could start to see the pound lose some steam. So that's going to be the first target. Maybe even lower, or maybe even closer than that. So if I go to remove and add, go to the pound, I think even like 1.332, that could be a good level to take some off, especially if we get those catalysts lining up as they should be. We could get a pretty nice drop to that level, and then maybe we get a pause. So I'm thinking of taking some risk off the table if we approach that level, or at least definitely tightening the stop loss on the position. So what else do you like on this middle of the week kind of?
What do I like? Like, what am I looking for? Um, Honestly, I'm just holding on to the positions. There's really nothing on the docket that I've seen so
Mhm.
far. On the Middle East front, I did see. Well, I actually got the headline before Financial Juice. So shout out. By the way, I'm gonna quick plug here. Shout out to the A1 Trading Discord. Literally, I found out about the Kuwait bombing before the headlines, Financial Juice, all that gave it to me. We had a
Okay.
member in the chat yesterday night. He was, I think he lives in Kuwait, and he was basically saying like, we got hit again. It's not looking good, whatever, whatever, right?
Mhm.
And then this
Mhm.
morning,
Mhm.
like hours later, you get the headline that Kuwait got hit. So
Mhm.
I would say
Mhm.
that, but I say all that all to say, as far as an update on what I'm watching, things like that, the actual economic calendar, I'm looking for ISM services today, and then it
Okay.
seems like you still have the opposite of the escalation going on in the Middle East. So you have Kuwait. I think they were looking to open up another strait. Iran is, and so that's not helping oil. I mean, just looking at the price of oil today, you're up another 1.8%. So you're getting closer to that 100 mark slowly. You're on track to get there. So that's going to fuel yields. That's going to fuel the dollar. I mean, here it is. Yields are bouncing up off of this upward move right here, right? So yields are still trending higher, and so that's just going to add more fuel to that dollar trade.
Yep. Yep. And it looks like, as you mentioned, the conflict is heating up a little bit again. So I'm not sure exactly who bombed Kuwait. Was it Iran?
I want to say it was, yeah, Iran most likely.
Hmm.
Let me
Because I know
see.
that Iran is fuming with Israel, so that has been going on this whole time as the ceasefire has been implemented between the U.S. and Iran. But of course, Israel and Iran are still going at it. So you're getting a little bit of conflict here and there.
Mhm.
Okay, so Bashi says it's Iran. Well, not a good sign. Not a good sign to towards a path of kind of a complete de-escalation.
I agree. I agree. It's kind of like the environment that we're navigating, and that's why, um, like at this point, man, I'm just going with like the obvious trade, which is just long dollar, right?
Yep.
The
Yep.
the original reason why it lifted off so much was that safe haven status, right? So that could be another thing that's really fueling the trade. So I'm kind of
Yep.
just gonna stick with that, to be honest. Gonna watch yields, gonna watch oil, gonna watch the dollar index, and then just go from there.
Yeah, like in the book Alpha Trader, the writer says sometimes, or actually most of the time, the most obvious trade is the one that actually works. So at
Yeah,
this point in time, dollar long seems to be the most obvious trade, and it seems to be working well so far. So we're gonna see what happens. What about UJ? UJ, I think it hit 160, or it's super close to hitting 160.
yeah,
So
it's right there now. Nick beat me to this, but yesterday he brought up a good point in his video. I had made a post about this as well, but UJ, right? The Bank of Japan has very much voiced the idea of 160 defending that level. Now
mhm.
they intervened with 11 trillion yen right around here in this 1.5 week period, and then the move just completely reversed. Right, like it was ineffective because the underlying dynamic of the carry trade is still very much in full effect, pulling this thing upward. And so I think that maybe they do have, either some verbal attempts around 160 again, or you have just general profit taking happening as traders start to, you know, anticipate some kind of an intervention or something like that. But I do think that there's a world where if you get price action just kind of stall out here at 160 for a long time and it is ineffective, any intervention is ineffective, verbal intervention is ineffective, then you can have a situation like Euro Swiss in 2015 where the Swiss National Bank was like, hey, we're going to defend 120. 120 is the floor. 120 is the floor. And so you had basically on any like dips, traders would just buy into 120, because they knew it, and then just profit taking right there. And then you got price action that was just like stalling out right here because they thought that they were always going to defend that. Well, if that strategy is ineffective, if you're just throwing money at that level and it's not working, it's not doing what it's intended to do, then they're just going to raise the floor, or in this case, raise the ceiling. And so I think dollar yen, right? If you continue to see it kind of just chop around here, then maybe Bank of Japan can ditch the idea and say, hey, maybe 162 or maybe 165 or whatever. And then you can see something like Euro Swiss. Euro Swiss moved like 4,000 pips in 15 minutes. Like the spreads were 4,000 wide. You know what I mean? Like imagine you put a market order at right here, and then it gets filled way in the moon, right? Kind of situation. So like, yeah, it was a bad situation. I think that could be a possibility. So I've kind of switched my lens with dollar yen instead of trying to participate on the short setup here, just because the risk to the upside or them removing that floor is actually possible. I think any meaningful dips in dollar yen would be viable. I think where we got to 158 right here, where you had this initial intervention and then you retested into this level and then became resistance, but ultimately you broke above it. I think that's a good level, 158, and also like 155 as well, where that 200-day moving average lines up. So that's kind of where I'm headed with dollar yen. I think it's the safer approach too, because you have the overall fundamentals kind of just leaning that direction as well. You know, the carry trade.
Yep. I'm gonna show you something interesting on UJ.
Yeah, please.
So if we go back to my charts and we go to USD JPY, we go to the last time when a big intervention happened, which was in 2024. So essentially something similar happened where they did an initial intervention in April, as you can see here, and then the price trickled up, hit 160, but actually continued higher for a little bit longer, and then it got crushed lower with a lot more force and a lot more selling than the initial selling. So I'm thinking maybe something like this can happen again. So we get a bit more appreciation, 161, 162, 163, and then we get the big drop. But it does heavily depend on the change in narrative as well, because from my understanding, the BOJ or the MOF is the actual guys deciding on the intervention. BOJ is the executor. So basically the MOF goes to the BOJ and then the BOJ does the selling or buying. But anyways, so what could happen is something similar to what happened here. Is there a trade in there? Maybe. I think the higher we go, the higher the chance of an intervention. So if we hit 161, 162, taking a stab short could be a smart way to go. So that's my sort of game plan. 161, 162, 163, small positions. It could pay off. But yeah, what I wanted to say, so the MOF is betting on a change of narrative as well. They don't have enough liquidity to create this just by selling US Treasuries, so they can't do it. But if you get a change in narrative, so if you get possibly a very weak NFP print, a very low inflation print, or you get Warsh being super dovish, well, that could be what they need to come in and smash it even more.
Makes sense. And also too, Ueda too, like, not to say that, you know, the dollar yen trade to the upside is going to be like that forever. Like maybe let's say, I don't know, 3-4 years from now, the Bank of Japan has achieved what they're trying to achieve, which is raising their interest rates, right? Maybe they're at 2% or so. And while that's happening, the US is also trying to lower their rate, right? They want to get to close to 2% or 3%. So if you do have like that interest rate differential, like maybe 1%, maybe 4 years from now, then obviously the carry trade is no longer as strong as it once was. And it becomes, you know, that will naturally, that would be like, I think Bank of Japan's favorable best case scenario, where the fundamentals just naturally drifted lower without having to artificially move the price. So absolutely. Yeah, that's very interesting, Marco, that chart that you showed me. It seems like that's kind of what's happening right now. So you had that little quick brief drop, and now we're just moving straight up there. So yeah, maybe 162, 163, and then you get another drop. But then My only concern would be if you get that level and the fundamentals are not shifting in that direction, you still have
Mhm.
a very
Mhm.
stubborn Fed at 3.75, and Bank of Japan is struggling to raise rates, then
Mhm.
the risk of like them moving that ceiling kind of increases there. But yeah, very, very interesting take there.
Yeah, I mean, could be history repeating itself. So history doesn't repeat, but it rhymes, as they
Oh
say.
yeah. Oh yeah.
But I think that the higher we go, the higher the chance that it drops, and the better the trade you can get. And risking maybe 0.3, 0.5% on a sell position at 161, 162 seems good to me at the moment, at least. So gonna look into doing that, especially if war turns out dovish. It could be it could be the catalyst we need for UJ to drop. And the MOF is known, or the BOJ is known, to wait for events that are bearish on the dollar or bullish on the dollar, depending on what they want to do, to come in and sell it or buy it even more. Because right now they want UJ to go down, but there was times in the past where they wanted UJ to go up. So it works both ways. They want to keep it in a range, as far as I understood.
Yeah, yeah. What are your thoughts on the metals here, Marco? I'm kind of and I've been very mean towards silver. Like I'm more
Okay.
favoring to gold than silver, but silver on an intraday level, or as long as we continue to see higher yields, a stronger dollar, things like that, higher price of oil, I like silver to the downside. If you just look at historically here, we had a very monster run up in silver, but they can see the other times when you had that back in the 80s, right? 1980, monster run up, and then a complete crash in silver, and then 2011 as well. 2010 to 2011, monster run
Mhm.
up, a crazy crash. I'm thinking you get some kind of the same story here. So I'm actually very open to being bearish silver. What are your thoughts
Okay.
on that? Do you
Okay.
have are you looking the opposite way, or are you kind of in
Um,
line there as well?
so I do have a buy position on gold, which is very correlated to silver. So I'm not exactly sure if I want to sell silver, but it does seem like a good story, especially because silver is known to be negative or break even after making 100% or more in a specific year. And we know 2025 was an absolute rock star year for metals. So I actually like that idea. And if you zoom out, as you did on the I think weekly chart or the monthly chart, you can definitely see that it kind of peaked. So the cycle peaked, and now it's probably time for it to go down. So I don't think it's such a bad idea, but I still want to bet that gold holds the 200 EMA. So I'm still sort of remaining in that position, and it is a nice hedge against my GU short. So that's another reason. But if I get stopped out of gold, if silver breaks 70 or breaks the 200 EMA, I think it could be pretty good.
I think honestly, this could be a trade where both sides win. Like for gold, my kind of thought process is more longer term in nature. Like this is a level that if you go on a weekly time frame, like you can see that it's a strong level on the weekly. Versus on silver, my kind of thought process would be more short term in nature. Like if you were to somehow get a bump back up to like 78, then I would just short this move down here out to 71. Like I wouldn't really reach for the stars and try to cash like a big like I here let me illustrate this instead. I'm not gonna try to catch
Mhm.
this big candle here. I'm just
Okay.
kind of taking a small like intraday position or shorter duration swing trade there. But I do
Mhm.
like I
Mhm.
think 72 would be the next level of support for silver if it were to get a bounce. But yeah, I kind of like that a lot here. So I think I'm just excited, Marco. I now have access to like the metals,
You have
um,
a prop account, right?
yeah, yeah, the Bitcoin
Awesome.
story too. Like
Awesome.
Bitcoin is getting crushed. I think it was having to do with Michael Saylor selling for the first time,
Yeah, that was
which
funny.
which is not good, right? His whole strategy is literally to full port Bitcoin at any given chance, and he's doing the opposite there. So, yeah, I guess I think I'm getting ahead of myself here, bro.
Yeah, if you watched one of or some of his interviews, you can see that we will never sell Bitcoin. Like we will always be buyers. And then on an earnings call at the beginning of this year, he's like, "Yeah, we may sell a little bit of Bitcoin." And now he's selling Bitcoin. But of course, he's going to remain rich for the rest of his life, while the investors will get squeezed. And that's how
Exactly.
it goes on Wall Street. So yeah,
Yeah. In trading, man, you can never talk in definite terms. That always come
absolutely.
back and get you. So it seems like that's what's happening with him. But Marco, I'll
Yeah,
go ahead and pivot out here. I'm 6 minutes over my segment into yours. So thank
no
you so much,
worries.
man, for the
No worries.
conversation, and we'll catch up tomorrow.
Sure. We will catch up tomorrow and we can talk more about Michael Saylor.
All right, man. Take it easy. Bye.
Yep. See you. Goodbye. So my segment, let me just see if James is in the background. I think he is, but let me move some stuff. Okay, I think James is doing it. Nice. Let's just add my charts. Okay, fine. So I wanted to mention before I begin with the solo segment, if you want to join the A1 Discord, if you want to get all of my positions, so if you want to get trade signals, such as the GU short, okay, and many other trades which were pretty good. You have actually my whole, I have my whole track record posted in the A1 Discord, right? So you can watch my trades, you can follow the live trades, you can follow the trade history. You have all of the statistics in there, so you can see if I'm profitable or if I'm not profitable. So you can see it in black and white. But basically what I wanted to say, GU short was a signal. It's a very popular trade, so you already had the signal from Nick. You already had Alan selling EU. So it's not kind of like I invented hot water, but I still think it's a pretty good position. If you want to join the A1 Discord, you have the discount code Marco, which gets you 25% off. Okay, so you get access to all of the trades. You get access to Nick, Alan, Iwind, Chris Palber, and me, which I think is a dream team. And you get access to some pretty cool traders in there. My favorites would be Ballout, Max, Sluggy, Brutale, and I think the new member is Timing Over Time. I think that's his name. So some pretty funny characters in the Discord. I'm sorry if I forgot anyone, but yeah, love you guys. Now let's go to the charts. Gold, I still have running, which is in a bit of a drawdown. So it's not working as expected. Personally, I think it's holding okay. So I think the 200 EMA is holding well. We're kind of at this level of support. So I don't mind holding it. I'm not going to prematurely close it for now. Let me just check the Edge Finder reading. Yeah, Sluggy. Neutral right now, -2 score. So not the best thing in the world, but not the worst thing either. And it's kind of a good hedge against my GU position. So for the GU short, a good hedge is the long on gold. And with all of my positions, I have a positive reward to risk. So if one of them loses, the other one, there's a very high chance the other one makes up for the losses and then some. So when I lose, I tend to lose 1%, but when I win, it's 1.5 to maybe even higher than 2% per position. I think the Nikkei trade was 2.6, something like that. So Nikkei and the, what's happening with the Nikkei? Whoa, so this is pretty crazy. I think Sluggy is actually in this position. So Sluggy, if you're still in, put a comment in there. But this is looking extremely bullish, although I'm still looking for a pullback. Yeah, still looking for a correction to the 20 EMA. Nasdaq, same thing. Still looking for a correction. I need to move this up a bit. 20 EMA is usually the area where I like to enter. And I can't do much at the moment. I can just watch this chart explode and the Nikkei chart explode and sit on the sidelines. So it doesn't fit the plan to really go in at all-time highs or to try and catch this huge uptrend. You get a much better reward to risk if you wait for a pullback, and also it keeps you out of a lot of positions. It all depends on your trading style, that is true, but I found filtering down the amount of trades I have and lowering my activity in the markets does help to produce a better edge. Okay, it does help to produce a better edge overall. Plus, you lower the commissions, you lower the swaps, you lower the spreads, or all of the commissions that these brokers add on top of your trades. So for me, it works. For you, you may want to be active all the time. There's traders out there who place 3, 4, 5 positions every single day, but I'm more of a swing trader, so I try to filter things down. As far as copper goes, we looked at copper yesterday, had a big bullish move to the upside. Now it's pulling back a bit, printing a red candle. I think copper is doing well. I would love to get, or is it already bullish? Neutral at the moment. So I would love to get a bullish print on the edge finder plus a pullback to the 20 MA, near the 20 MA, and then I would maybe get in. I don't know, considering it. I think with the weakness from the metals, copper could sell off because it kind of follows the group. Okay. Sluggy says, Marco, I've trailed stop losses on the Nikkei, been in the Nikkei since 59. Okay. That's an awesome entry. So that's an amazing entry right there. Personally, didn't fit my plan to enter during this pullback. Technicals were fine, so the chart was fine. I just was expecting a deeper correction and a bigger risk-off move. So didn't get in, but it's not going to be the last pullback in the world. There's going to be more pullbacks later down the line. Carlos says, thanks, Marco. Today I passed my 10K final count from the giveaway. Awesome. Congrats. So I wish you good luck and be careful with the risk management. Okay, don't risk too much. Don't force things. Don't rush things, and keep it steady. Hi, Mark. What do you think about Aussie NZD? I want to trade some pairs that are less impacted by Iran war and Trump tweets. Unfortunately, it's going to be impossible to do that. So removing the Middle East out of the equation is almost impossible. Pretty much every single thing is impacted by that. Aussie is a big risk on currency, highly connected with oil prices as well. So you're going to get some movement in there from the Middle East. But Aussie NZD, I think it rolled back. It's not the one for me. Okay, it's pulling back. I think the New Zealand got some really hawkish pricing, and the pricing was too hawkish. So you have 76 basis points of hikes priced in for New Zealand. You're getting the RBNZ, who are super hawkish. Their future projections are hawkish. You're getting the New Zealand economy, which is doing really poorly. So hiking into a poor economy is not really bullish for the currency. I think the markets are starting to understand that. So they're selling the New Zealand dollar. Let's see, NZD-USD is probably going to be going down as well. Yeah, absolutely. Yeah. So the markets have started to realize that, maybe. I don't know. I'm staying away from NZD for now and the Aussie. I think the best trade at the moment, the most obvious one, is buying the dollar. So that's the game plan. That's what I'm doing. If I get any more trade ideas, I will update you in the A1 Discord. So for all of the signals, for all of my trades, join the A1 Discord. Link is in the description, and use the code Marco to get 25% off. So thank you very much. Don't go anywhere because you have James coming on right after me. I wish you good luck, and you can catch me tomorrow. Goodbye.
Did you know you can get a copy of the Edge Finder completely free with our sponsor, 8cap? 8cap is a super well-known brokerage that has been in the game of CFDs for a long time. And if you are interested in switching your brokerage to 8cap, they can actually purchase a copy of Edge Finder on your behalf, making it completely free for you. This is an offer our team has worked out to make the Edge Finder a completely free to access tool if you move over your account to 8cap. Here's how this works. It's pretty straightforward. If you head over to our website, a1trading.com/8cap, you can explore this offer in more details, including all the terms and conditions. But basically, the high level idea is if you create an account through that specific page and you meet the deposit requirements, 8cap will effectively buy a copy of Edge Finder for you. Now, please note this is unavailable to US traders, but for my friends outside the United States who trade CFDs and you like the brokerage 8cap after exploring it on this page that is linked below, then maybe you consider taking advantage of this offer. We've had a lot of people do this, and it makes the Edge Finder completely free, which is a hard price to beat, by the way. It doesn't get much better than free. And it's a win-win-win. 8cap gets a new client, you get a great brokerage, as well as access to our software, as well as other stuff on that page. You can get access to free memberships with us, Stockbox, etc. at no cost to you. You just move over your trading to 8cap. So the full details and terms and conditions can be found on this landing page, again, linked in the live stream chat or in the description down below. Please also make sure to do your due diligence to make sure that 8cap is a good fit for your trading and meets all your criteria for what you're looking for in a brokerage. On this landing page, you can explore the different product offerings that you get access to from our store completely free if you deposit certain tiers within this list. And the cool thing about this multifaceted offer is that even if you have a lower capital basis, why not move your account over if you like the brokerage, you like what you see there, and get something for free out of it. I think this is a really cool offer that they've set up with us, and it is sort of a co-branded offer by 8cap sponsoring A1 Trading. So check them out. Again, all the information can be found on that landing page, a1trading.com/8cap, or found in the description or live stream chat below. Thanks to 8cap for sponsoring. Now back to the stream.
Hello, gamblers and traders. How's everyone doing? Happy Wednesday. Hope everyone is well. Hope you're all having a good start to your weeks. So I'm in a short position on the pound dollar. I'm still short on Aussie New Zealand, which actually has come all the way back to my entry, which is a bit unfortunate, but I kind of agree with what Marco was saying. Somewhat, not entirely, but what he said does make sense. I am still very much in the mind that this market does need to have a larger correction to the downside. We are seeing banks turn more bearish on this. The Australian dollar is still quite crowded to the long side, so I'm not really concerned. I might get stopped out. It's cool. I can sell at a better price. It's completely fine in my opinion. Pound Swiss is playing around. So similar to the Aussie New Zealand, we had a really nice move to the downside, came down to actually about 1.5% profit, and now it's just rocketed all the way back up and missed my stop loss by, like 1 or 2 pips. So yeah, a little bit annoying, but it is what it is. It's completely fine. And the reason it's completely fine is because I've cashed out of the Nikkei. So I made 4% on this one, cashed out, and we're done. So this trade is no longer active on my side anyway. So yeah, completely fine with really however the open positions go, because yeah, it's looking good. So that's it. I've got nothing else going on. Crowded dollar long. I don't think the dollar is crowded. Actually, we can take a look. Let's have a look at the history when it loads here. Yeah, the dollar's definitely not crowded long. I mean, we're barely above 50% in the on the long positioning there on the Edge Finder. So yeah, I think the dollar's fine in terms of its status on crowded or non-crowded. Everyone's in GBP/USD shorts. It's because I think the fact that we all are in like the same community, you know, whether you're a viewer or a streamer here, you know, we all follow basically what the Edge Finder says. And I know a lot of you follow what Nick says as well. So with that said, I think we are all going to end up in at least similar positions, if not the same ones. Because I think we all trade very similar technical strategies as well. I mean, I know the way that Nick and I get into trades is very similar. We both use fibs and key levels, support resistance, and that type of thing. And I know a lot of you guys do as well, except Bashi, which has to make it really awkward trading on the 1 minute time frame. But there you go. So pound dollar is getting a bearish reading, which is fine. The Nikkei is still bullish. So I got asked this morning why I closed Nikkei. And I think it's a very valid question because, you know, there's 2 approaches you could go with this, really. I mean, you could just trail stops and let it run, which was initially my approach, or what was going to be my approach. However, the fact that it's just had such a strong move to the upside with really no pullbacks, like there was no 50% pullbacks, there was no reasonable pullbacks, is what I call them. You know, we had these slight drops here, but I personally, I wouldn't classify these as pullbacks, really. More just slight pauses and then continuations. I just feel like this market needs to have a bit of a move to the downside, and then I can get back in if the Edge Finder is still bullish. But I'm happy to book some profits at 4%, and then, you know, move on and wait for the next opportunity. Because what I don't want to do is sit in a trade that's run 4%, runs back down, if I trail to, I don't know, let's say here, stops me out here for like 2.5% and then continues, I'm going to have to reposition. I then have to put more exposure back on the table or re-expose myself, and I've taken less profit. So for this specific position, I'm happy to just book it rather than trail stops. So yeah, that's that. New Zealand dollar CAD is getting a bullish reading. We could take a look at that one in a second. Dollar yen's getting a bullish reading as well. However, I don't really have, my tabs keep getting lower and lower. I don't really have much of an opinion on dollar yen at the moment. I still think technically and fundamentally bullish, but we're almost at 160. So now the question is, can the bulls defend this level? Oh, sorry, let me rephrase that. The bulls have no option. Is the MOF going to intervene at this level? Because it doesn't matter how many bulls are in the market. If they're going to intervene, we're going to see downside regardless of how many buyers we've got there. So, it might be a similar thing. We break above slightly to come, maybe sort of triple top, and then we get some sort of intervention and a continuation. I think the problem is really it's, push and pull, the push the markets down, the traders and investors just buy it all the way back up. Again, as I've said previously, nothing's changed. The fundamentals are the fundamentals. It's still a fantastic carry trade. They've still got low rates relative to domestic markets, especially like the Fed. So they could intervene as many times as they want, but until something fundamentally changes, I just don't think we're really going to see much of a difference. It's going to be a case of intervention. Okay, let's buy it, and then intervention. Let's buy it, and it's just that cycle of nonsense. So for me, I've got no interest here. I might try and buy some if we do get another intervention, but I'm really not that bothered. Dollar yen, in fact, yen pairs, generally speaking, are just not my cup of tea. They don't tickle my pickle the way I'd like them to. So Aussie US dollar, I didn't take this trade in much regret. The reason I didn't take it is because I'm already short on the Australian dollar via Aussie New Zealand, and I'm already long on the US dollar by pound dollar. So it was kind of just doubling up my exposure. However, I do really like it. So I was talking about this one over the last week, maybe. I told you guys I was interested and I liked it. And it's the same reason. We've had the RBA hiking rates. They're now on pause. The Fed is getting more. Actually, before I continue that point, let me just see what CME FedWatch is doing. Oops, CME, there. So I know we did have some more hawkish prices. I've not really been too focused. I've had food poisoning over the past few days. So actually a little bit of a cut priced in, only 1.7%. So it's really not that relevant. However, in general, the dollar is seeing upside. Let me drag over my other tab. Hold on, I've got all my TradingView tabs on different screens. There we go. So US dollar over here is seeing some nice strength on the daily. The weekly is also quite strong. However, we are still trapped in this weekly range. So I think it's more a case, really, can the dollar break above these highs? If it can, then I think we're pretty good to go towards 105. Where's 105? Around here, 105, maybe even 110. Depending on obviously fundamentals, developments, central bank, and so on and so on. But generally speaking, I think Aussie US dollar is a fantastic trade to get in. But again, unfortunately, I've missed the entry for now. I still like Euro Aussie. It's more a case really. I've just got to wait here. So as we've been saying, again, the Australian dollar. I'm not going to repeat myself for a third time. But now we're potentially seeing that advantage the Australian dollar had earlier in the year start to dissipate. I do think that some shorts off I'm just trying to find it, this weekly support level, roughly around here. Let me just recolor this. Sort of longs off this level do make sense, but I would need to see the H4 trend change bullish, and then, I could start getting into my typical swing positions with the trend and the pullback. I'm guessing 160 to 160.7, depending on momentum. Yes, very true. I'm long I'm in Euro Swiss longs. We can have a look at Euro Swiss shortly. Japan's PM to take appropriate steps on FX is needed at any time. This morning, 8:30. Doesn't mean much. Probably just talking about interventions. 5 minutes till USA PMI. All right, let's take a look. We'll use Trading Economics. I quite like their calendar. Oh, wait, that's the wrong one. Calendar. Let's just do major. There we go. What day is it? Wednesday, actually, let me just put it to today. That would make it easier. ISM services PMI. So let's see what happens here. James, being AUD CAD long and following the exit plan has been rewarding. Very nice, Sluggy. Well done. AU 2 years still holding support pretty well. It is, yes, the Aussie dollar is getting a bid. Yeah, basically this week so far, but it is what it is. I'm not worried. Again, I think my thesis is fine. It's not broken yet. So it's more a case of, yeah, I'll keep taking attempts until, well, obviously within reason, but I'll keep having a go until either the thesis breaks or my, my, what's it called? My budget's met. Wait, what time does this come out? 3. Oh, we've still got 3 minutes. Sorry. I was thinking it was coming in a few seconds. Okay, so we've got 3 minutes. I'll put this over to the side. What else have we got going on? I'm considering natural gas, but it's not really a fully fleshed out idea yet, so I won't cover that here at this time. Pound New Zealand. Now, again, as I've been saying, I still think this is a fantastic trade. And I was actually in a really good short position last week, but I took profits a bit too early. I think I sold around here looking for this double top. Give or take, I can't remember exactly off the top of my head, something like this. So I didn't take a whole lot. I got a 1 to 2, but I did miss out on this entire move, which would have been a 1 to 5. So, I was sat there booking a 1 to 2, thinking I was, best trader in the world. And then it continues to run, it continues to run, and it continues to run. And then, I'm not feeling so good about myself, but it's all good. So Pound New Zealand's back into a really nice level of structure here, which is actually where I'm considering to look for an entry, but I'm still a bit concerned of the left side we've got up here. That could be a bit of a correction. So if we don't see a rejection off the current level, I would be more inclined to actually look for potentially a double top and then a rejection. Now, I don't trade double tops and double bottoms and things. It's not really my style. But when I'm very, very confident about an idea and there's a technical setup there, I'll have a go and we'll see how it goes. And then the S&P, which we'll take a look at in a couple of minutes. Well, a minute and a half after we've had PMI come in. Always easy in hindsight. Yes, it is. Let winners run. It's easy to say let winners run, Bashi, until they completely reverse and hit break even, just like what I allowed to happen on this trade right here. So, it's always that thing, as Sluggy said, hindsight will normally punish you for using it, but it's all right. It's our job as traders is to move forwards. To be fair, it's kind of the opposite on the Nikkei. We cashed out at 4%. And we're starting to see it pull back now. So, it is what it is. Lower time frame, more predictable? Not at all, in my opinion. I think on higher time frame, follow momentum. I would actually say it's reversed, Bashi. I think lower time frame is easier to follow momentum, and higher time frame is easier to make long, forecasts and predictions. Because the thing is, you're not subject to the intraday noise. Typically, obviously, it really does depend on the severity, but yeah, generally speaking, I don't really care about what happens over the next 2 hours. It's more a case of what happens over the next week or 2 weeks or, a couple of days even. So I feel like I've just been yapping this whole time, but we do have news coming out in 10 seconds. So let's drag this back. Can I zoom this in for you? There we go. Maybe one more, maybe 2 more. 2 more zooms. That was the nice one. Lower time frames of roller coaster. It is indeed. So we have ISM services PMI come out at 54.5. Previous was 53.6. Do you know what that means, ladies and gentlemen? That is expansion within services. That is bullish on the US dollar. So let's go ahead and see. Now, how many pips do we think pound dollar has moved? How many are we going to say 500 pips now my take profits hit? Or do we think it's probably not very fun? I don't know. Let's take a quick look. Yeah, not very interesting whatsoever. not very fun. So yeah, I mean, that's positive for the US dollar. So Edgefinder will say this. Let me just make sure I'm thinking this right. Yes, Edgefinder will give this a bullish reading. So we've got obviously actual versus consensus. So actual is 54.5, which is above the consensus at 53.8. So good stuff. That's another tick in that dollar bullish category here. So let's go to asset scorecard and isolate the US dollar and have a quick peek. I don't think it's updated yet, but we can just put it into context before it does update. So growth services, this will now change to bullish, which is a tick. So this is likely, I think it will actually change the economic growth bias to a bullish one, which is obviously good. So now we've got jobs market's neutral. Yeah, I don't think we've had any change there. Inflation is very bullish. Economic growth, I think, will tick bullish as well. Institutional positioning or activity is bullish. And technicals are bullish on the H4 timeframe, and daily as well. So I think that's just another tick or another check in that the idea that I think Marco said it as well before I came on buying dollars is pretty simple at the moment. I would agree. Oops, hold on. Sorry, I think I didn't mean to show that. I should probably close Discord before I get on stream. Anyway, ladies and gentlemen, dollar bulls are intact in my opinion from that. We are seeing, again, dollar on the weekly time frame behaving quite well. Let's just take a look at 2-year, 10-year yields. Nothing too interesting. We are seeing them pick up a little bit. 10-year yields also slightly to the upside. Currencies, we're seeing the Australian dollar dominance back in play, unfortunately. What else do we have that's interesting? Not too much, really. Safe haven flows, the VIX is down quite significantly, actually. Let's take a look at the VIX individually. So let's use the daily. Yeah, the VIX is seriously down, actually. I would expect a slight pickup. Hold on, let me just see. I know we said we were going to speak about the S&P, so let's go over there. So with the S&P, we were getting, hold on, let me just close Discord because I don't want to leak anything. We were getting a bearish reading. Are we still? It doesn't seem like we are. So the S&P short idea that I was floating, I don't think I can justify that anymore because, we had the S&P reading bearish. I've got a personal longer term thesis that's bearish on the S&P as well. So things were starting to line up and we're slightly at the time seeing a little bit of sort of double top potential, but yeah, it's kind of gone out the window now. So I think the best approach personally is just wait. I don't think there's anything I can do. We can't buy into this. We can't sell it. What can we do? But you get butchered by algos and lower timeframes. Well, Sluggy, if you trade your VWAPs, you can trade with the algos. Wink, wink. Euro dollar, my view. Euro dollar, I would assume downside. So the euro and the US dollar are pretty much obviously inverted, really. So if we're seeing dollar strength, we can typically expect euro dollar downside. We're also seeing pound dollar down as well. So euro dollar shorts seem fine. The only thing I would be cautious of is the ECB hiking potential that we are getting. Let me just take a quick look at what that is at the moment. So on the 11th of June, 2026, we are expecting, 100% probability of a hike. And then on September the 10th, 2026, we have another very high probability of a hike as well. So it's really a case of what do you think the Fed's going to do versus the 2 hikes that are coming up for the ECB. I don't like euro dollar as much as I like pound dollar, although I do think we are going to see some downside. I think pound dollar downside is a little bit more, I don't want to say certain, that's probably not the right word, but I just think the relative strength is better on pound dollar versus euro dollar. I did 6.7 pips. That's bad. I was expecting like 10 to 15. What are you talking about, Bashi? VIX has been down. Yeah, I've not really been across the markets too much. I was away, went away on Thursday, came back on Monday, and then had food poisoning. So yeah, it's been quite inactive when it comes to keeping up to date with the day-to-day stuff. USA PMI and GU. Let's take a quick look. Yeah, I mean, I don't think there's any problems on GU. It's more a case of just let this one run. It's positive. Actually, it's negative swap. So positive swap for us as short sellers. So I think, it's pretty straightforward, really. Is VWAP free? It is. So if you go to TradingView, you click on the forecasting and you click on anchored VWAP, you've got it there. You know what's interesting, actually? I'm just going to talk about this very, very quickly. If we go to a daily time frame and we put a VWAP on the year, on the start of the year, it does give you quite a nice entry thing. Actually, maybe not on pound dollar as much, but where's it gone? Okay, well, you know what? It's disappeared. I'm not going to stick on that topic for too long, but feel free to try that yourself. It's pretty cool. So, what have we got? What else have we got to discuss? I don't think we've got too much. So Nikkei was spoken about. New Zealand CAD. Let's pay attention to that one because I haven't looked at that recently at all. Where is it? Here. Oh, you know what's interesting? We are seeing a potential entry, actually. So we draw the fib from the low to the high. We're currently, actually, I really like this. Currently in the fib zone, which lines up kind of with this. I mean, it's a very large area here, but it does align, so I'll take it. Previous high to the left, and then obviously previous high over here. So, you know, do as you please. This is the way I do it. I don't take technicals too seriously. As long as there's something there, it's okay. And it justifies the position. So something like this, I actually really like. And again, that would be on the back of the Edge Finder bullish reading. Technicals, trend on the H4 is bullish. Actually, let's just take a look at higher time frames before we get too excited. It's unfortunate. The weekly has just rejected the 200 moving average. The daily has just flipped bullish. The H4 is bullish. So it might be worth doing, even though the weekly is not overly favorable. I do see the potential. So yeah, I quite like it. Your take on gold, Nick, is short and silver. I like the idea on both. I think short metals at the moment is more common sense than going long, to be honest. So gold is still hanging around this support level. So I wouldn't want to go short on gold, but I think if we look at it objectively from, you know, yields and just the current global situation, gold's not really in a spot for any rallies until we get de-escalations. And again, we've spoken about all this previously. But yeah, I wouldn't want to be a buyer of gold, but I also wouldn't want to sell it just in the current zone that it's in. Silver, however, I do think has more downside. So if we compare gold and silver, gold is really close to this 200 daily moving average. We've already rejected it twice, whereas silver is a little bit different. We did come down here, but I do expect we could come down again, have a little bit of a retest in this area, and then maybe we have the continuation to the upside from there. But yeah, there's no trade for me here personally, but I do quite like the idea of being short on both. I was watching the same on New Zealand CAD for an entry. Very nice sluggy. Great minds think alike. Let's see if we can buy silver if it goes down enough. 60 to 50. Maybe, yeah, let's see. I don't know. I don't see really how silver could go down towards 50. Maybe 60 maybe. Yes, we could come and like double bottom around here, but 50 and sort of 40, I think it's a little bit pessimistic for silver. Absolutely could happen. I'm not saying it can't, but just from my view on silver, I just don't really see that as a possibility. So I think if silver reached 40, I would be buying it heavily. You know, that would be a massive discount for me. I mean, consider the fact that silver peaked at, let's just say 120. It was actually 121.6, but we'll just call it 120 to keep it easy. If it dropped down to 60, that would be a 50% discount from its peak. If it dropped down 40, obviously that's even more. I'm not going to do the maths because I'm not very good at maths, but still, that'd be a significant discount for me. So if that did happen, I'd be very happy, but I just don't see that as a likely outcome right now. I'd want it to. I think many people would want it to, but yeah, we'll see if that does happen. So oil, what's going on here? Actually, let me just do a time check. Okay, I've got 5 minutes, and then we have Tiger coming to take over the show. So oil is still holding its support level. The problem is with oil really is what can we do? Because it's stuck sideways on the daily time frame. And, you know, we're just getting headline after headline. It's an ever-changing landscape regarding the Strait of Hormuz at the minute. So I think the best thing to do really is use oil as more of an indicator rather than as a asset to trade right now. I just think it's a bit too messy. So yeah, I'll be staying away from oil, but obviously do as you please. It's not financial advice. What else do we have? Let's see if there's anything else we can discuss before Tiger comes on. Platinum's getting a bearish reading. I don't really have any interest in trading platinum. However, Aussie New Zealand, I've just noted, it is still bearish. So yeah, I mean, that still supports my idea. I'm still short, so I think having the bearish reading there is still very nice. Euro dollar is getting a bearish reading. Pound yen, Canadian dollar, Aussie Swiss, dollar Swiss, Euro New Zealand, pound dollar, pound Swiss is also getting a bearish reading, but it's also almost at my stop loss. So pound Swiss, let's just do a quick review, because it might be a case where I have to just eat the loss and then reposition later in the week, which would be unfortunate, but it's okay. I think, to be honest, the trade is completely intact. Like, the idea of the trade is still completely fine. It's just the technicals have thrown it off a little bit. However, with the way this market works, its general behavior, it's not really a concept. It wouldn't be a surprise to me at all if it just continues now to rally down. I'm not saying that's the base case. I think the base case is that I do get stopped out, but I'm just saying it wouldn't be a massive surprise if it does continue to rally down from here. And the reason I say that is because the price action is very volatile. It's sort of unpredictable to a certain extent. We get these rallies and then complete correction rally, then another rally, and then another rally. And it's just a very sort of choppy market. It's very rare that we see a sustained, clean move to the upside or even to the downside. So that's what I mean by it wouldn't surprise me if it does just, run down from here. But either way, I'm not bothered. It's completely fine. My personal only 1400, can't afford to go in on 70 if it drops further. I'm not sure what you mean by that. If oil rises more from here, which it easily could, silver could see more downside risk. That is true, Sluggy. Yes, I know there are forecasts for crude oil or Brent, I'm not sure which one it was actually, to start reaching significantly high. I think crude was forecasted towards 150, which could absolutely happen. New Zealand yen bullish, daily broke out, retesting. Yeah, I've got no interest in yen. Even if I wanted to trade it, I couldn't, just because dollar yen is so close to 160. And you can see here, MOF sweet spot. Every time we attempt to break above, we just get that intervention. So I think it's too much in the danger zone for me at the moment. XTI has become an indicator at this point. Yeah, it has, absolutely. Yes, look, I know, I agree. That's what I mean. If I get stopped out on pound Swiss, I wouldn't mind actually just going straight back in. However, again, I don't know if I'm going to get stopped. If I don't get stopped out and this trade works from here, it might have to be the greatest trade of my career. Maybe not actually, but it would definitely be one of the trades that I remember because it's just so close. So there you go. New Zealand CAD looks like it's falling. Yeah, it's not looking too optimistic right now, but we are in a potential entry zone. So if we can get a bullish H4 candle to close from here on the next H4 candle, or even this one, I would quite happily take an attempt to be a buyer. Now, the caveat, I'm actually running out of time here, but the caveat is, this whole, past month, maybe a bit more now, I've been saying I'm not interested in trading the Canadian dollar just because it's exposed to oil, and then I'm exposed to, headlines more than I already am. So I think if I was going to take it, the sort of nuances, it would have to be lower risk than normal. So normally I'm happy to risk, 1.5% to 2%. That's kind of standard for me. I'm not bothered about that. So I think I'd have to risk either 0.5 or 1%, which to me is, rounded about half risk. So yeah, that's, I think, how I'd have to go about it. But actually, I've just noticed if we extend it even further, we've got even more structure through here. So this is a really nice break and retest as well. So I'm actually going to bookmark this one, or whatever you call it, flag it, and I'm going to set an alert as well. I've got a really bad habit of sitting on stream and looking at trades, and they do tend to work out quite well. But the problem is I forget that I've spoken about them because I've covered so many different charts. I forget, and then, I miss the trade. So set an alert so that doesn't happen this time. Anyway, ladies and gentlemen, thank you for being here. We have Tiger coming to take over the show, so don't go anywhere. Thank you for watching. Stay safe. Don't get margin called, and I'll see you all tomorrow.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1 Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
All righty then. Happy hump day, everybody. Welcome back. We here on here to close up the show for you today. Hop in the chat there. Let me know what you're looking at. Let me know what tickers that you are looking at. I'm actually pulling up my chat now. I just literally got off of another piece of content. So let me just get my pop out chat over here so I can see you. As always, see what you're cussing and discussing about. Yeah, definitely check out Ola Prime, guys. Nick's code that you see there on the screen if you haven't already. And 35% off the account of your choice. A lot of cool stuff happening over there at Ola Prime. And yeah, QR code, manual code, A1 Live. There it is for you. So anyway, guys and gals, just a quick update. I'm still in pound dollar shorts. Okay. Still in that. It looks like we're getting a little bit of a bounce to my direction today. And so far, okay. Now things might change. We obviously had our event come out earlier, the ADP employment numbers, okay, that came out. The ADP number, the non-farm. Now, this is not the major one. That's obviously on, I do believe, Friday. Is that right? Double check on Friday here. I think that's Friday. Yeah, non-farm employment. Yeah. So that's the big boy. This is kind of your whistle wetter, the tease, if you will, specifically for the ADP software, guys, which obviously, I don't know about the rest of the countries, but for the U.S., that's the largest employment software that we use here in the States. I know I've been working at plenty of jobs in the past where we clocked in, clocked out with ADP. So they like to utilize that. And as far as refreshing my screen, yeah, you can see we did get 122,000 of an employment change versus the 118 forecast versus the 105 previous. So that was a good number. It just didn't really point it green because it didn't think it was a big enough beat to paint it green, guys. But nevertheless, we did see a little bit of a spike on the dollar index because of that, and also because of just the continued uncertainty with the peace deal. Okay, the up in the air. Sounds like we're starting to get a little more old-fashioned love notes passed back and forth from the supreme leader of Iran. So it doesn't seem like he's too excited about coming out in public, and understandably so. But it sounds like we're starting to get a little more letters, a little more communication from him through his intermediaries. So that's kind of where we set right now. ADP, the trailer, the movie. Yep, that's it. That's it. That's exactly what it is, Simo. Exactly what it is. All right, guys. Yeah, let me know your tickers. As far as pound dollar, just to kind of lead off with that, go have a peek at it. You know, I tell you, this industry will force you to have a lot of patience. It really will. You know, I had that early push off with a really nice drop last hump day, last week. Now here we are 7 days later. Biggest chunk of it was retraced. And now, again, we're starting to roll back over. So I don't know. I feel like it's trying to start rolling back over again, guys. So I maintained the profit target that I set initially, which is down here, that green line. And you see my old projection arrow down there. So that's still what I'm going to stick with. This retracement right here, when we started getting bits and pieces of the U.S. secondary team, if you will, meaning not President Trump, meaning not the supreme leader of Iran, when they started talking about we've reached a deal, it obviously started retracing a lot of this. But then again, it's still uncertainty because President Trump came back with his excessive demands, or his edits, I should say. I don't want to say excessive demands, or maybe you could call it that, however you classify it. But again, it kind of slowed things down. And now, again, we're starting to roll back over. I won't really feel comfortable about this rollover until we start breaking a structure. Something like that, okay? That would be Monday's low point, which was 8 a.m. my time, which is basically the start of the intraday session. We start breaking and closing below there, I'll feel a little more comfortable. But so far, to me, this is just sideways. Because I care about impulse legs, guys. I don't know about you. I care about breaks of structures. And until we get this action right here, I'm not convinced. I'm not convinced it's ready to roll over. But if we get a breakdown there, then I'd be okay with, I'd have a little more confidence in that happening. But for all we know, we could just bounce and just kind of create, bounce into some resistance. For all I know, we could go sideways like this. Okay, we could just see that. You just never know. But if this happens, okay, I'll start feeling a little more confident about the possibilities of it sinking down to take profit. So that's kind of the way I see this. I'm just going to continue sitting on my hands, as always, with this. I think my meta trade finally did peter out. I think we finally did get a small loss on it. And good riddance, because I was in that thing for like 3.5 weeks, guys. That's way longer than my average trade. I'm typically in trades 1 to 4, 1 to 5 days max. And that turned into a longer term swing or almost a position trade, it felt like for a moment. But hey, at the end of the day, it's just too volatile for some of those sectors. My thoughts on gold, still pretty well neutral, but Nick actually put out a really good video yesterday, guys. If you want to dig into the mindset a little bit of kind of how gold operates when it comes to inflation, when it comes to interest rates, and things of that nature, and how it kind of how he talks about how last year he obviously had a lot of really good trades when it was bullish, and then when everything sort of flipped, you start getting rates pushing up, the rate hike possibilities and things of that nature. Then you start seeing gold kind of flip the other side. Okay, so overall, totally agree with what he said. But short term, with me trading, like I said, my 1 to 4 days, I just don't really have a play on gold or silver right now. But we'll still take a look at the technicals. It's obviously not on the edge finder to my knowledge. Yeah, we're still pretty well neutral on those items. But yeah, definitely, I encourage you guys, go back and watch his video yesterday if you didn't. Just go about, we'll watch the whole thing, but I think it's about like the first third part of it. First third to the middle, that's where he talks about the relationship of gold and silver, the precious metals, with rates and inflation. So it's a really good piece. I encourage you to check it out. And that'll make a lot more sense, I think, into helping you decide your positioning, what works for you with gold and silver. But the way I see gold right now, I've got a zone of demand down here. I have a zone of supply up here, and a lot of congestion, a lot of retail chop right here in the middle. So I would call this personally a little more of an equilibrium state or fair market value. It just so happens that it's being formed right straight through this swing low area over here. Swing low, swing low. So you got a little support. And then when price came back to support, it kind of started dancing on both sides of it. So, if you wanted to preempt this, which I wouldn't recommend because we are overall in a little downtrend, then I would be interested to see what happens with this zone of demand. See if it has any strength whatsoever to push price up. Because at the end of the day, we did have a collection of unfilled orders here that did push up and wick through the top of this consolidation, but it wasn't really a close. It just basically pushed price back into equilibrium. So I think we would have some strength here. Oh, and by the way, you see I've got a blue line that tells me that somewhere in the past I've got a former support or resistance line. There you go. Your October 2025 highs, guys, where we had a just gigantic spike up. This is when Nick was probably making all his money to the long side. Okay. And then we come into that middle part of October and we just had a big, ugly drop. Everybody thought gold was going back to zero. And what did it do? It based again, started another ridiculous bull run. So that's why I put these blue dash lines you guys see periodically scattered on my charts. I just want to see if those go through any zones of interest to me, because people have memories. People remember this big, ugly drop. People thought that the bull market was over. The bears have won the day. And in fairness, they had a gigantic, what was the percentage on that? That would have been about 10% drop. That's substantial. Okay. So I want to know about those types of price points in the past, in the future, if I have a zone around it. It just so happens there's a zone there. So that's really the biggest part of why I drew up that zone to begin with, because the reality is this: got a downtrend. If we take a look at a week daily chart, swing high, swing low, swing high, swing low. That's all the definition I need. Oh, and by the way, just the mechanical side of that, the 8 EMA is below the 21 EMA. So the red line, dark red, is below the light red. So that's kind of your mechanical confirmation, if you will. But that always comes secondarily to me, guys. All I care about is the high-low structure. In this case, again, lower highs, lower lows. So I don't want to fight that even on a zone, even though the zone did technically break structure or change of character, I guess is the proper explanation for that. Okay. Downtrend and you're breaking a structure to the upside, that's technically a change of character, but I still call it break a structure. I don't care about all the fancy lingo. And the point that, again, it hit that October 2025 swing high. Okay. So despite all that, I don't really want to fight the series of lower lows and lower highs, especially without a bias. It very well could, though. Price very easily could come down here, bounce in, collect unfilled orders, bounce off the October 2025 high, and then go visit a supply zone overhead. It very easily could do that. I just don't want to put my hard-earned money on it. Okay? I would be more interested in sticking with the trend. The trend is your friend until the bend at the end. Well, the trend is down, current trend. So that would be my look right there. If we can get Edge Finder back on the screen, agreeing on a fundamental sentiment level, well, the technicals are already there. If we could get a quick spike up, if we get a bear signal, I like this area. Now, there's only one item that I dislike about this supply zone, and that is all the ugly candles to the left of it. So for a while, what was this? This was another equilibrium. This was another fair market value area. You guys hear me say all the time, I try to avoid those fair market value areas with my supply and demand zones. But this is a pretty substantial one down here. This would make me feel a little bit more confident because now we're going above this high. This is partly your master pattern in work where you get your consolidations, you get your breaks to the low to test liquidity, your breaks to the high to test liquidity. So I wouldn't put it past it. That could be a good zone despite the fair market value that is there. Those things have a 50% median line concept that comes into effect as well. Well, that's basically at the distal line of the supply zone. So I say all that to say that because we had a lower fair market value, that makes me feel a little more comfortable about attacking that fair market value there, if that makes sense, guys. If we didn't have this down here, if this came down and just went straight up like this, that's a different story. Because that would mean that this is still our most recent fair market value, our equilibrium, our magnet. But because we had a new established fair market value area down here, a new consolidation, well, that leads me to believe that this is going to be our premium up here. This is going to be selling above fair market value, which is what I want to do. I want to buy below fair market value. But in this example, I don't want to buy under fair market value because we're in a downtrend. So rewatch that, rewind it if you have to see that a time or two to understand. But that's basically your actionable way, talking about master pattern. It's basically your actionable way of playing Wyckoff theory, guys. Okay. Hope that makes sense. If not, like I said, just rewind it. But I don't really see that would be my play right there. As always, not financial advice. Okay. I'm not a signal service personally. But if you're asking me, if you held a gun to my head and said, Tiger, you have to buy or sell this asset, okay, I would sell it there. I wouldn't buy or sell anything down in this area and fight the trend. So hope that helps on gold. Yeah, you're welcome. Absolutely. Edge Finder. Yeah, Fabian. Edge Finder has helped you find consistency this year. Yeah. Yeah, I mentioned this last week, I think, guys. The thing that Edge Finder has done the most for me is just save me my time. Time's the only thing we get, right? Time is precious. If I can save a couple, 3 hours a day without having to do all of this on an Excel spreadsheet like I used to, manually pulling over all the numbers and figuring out my own scoring system, okay, that's what I tried to do early on. But then when the Edge Finder came along, and I got into it early last year, I guess it would have been, it changed everything for me. It saved my time. It gave me my time back to where I could start focusing a little deeper on, hey, what the hell does consumer confidence mean? What the heck is NFP? Why does this matter? Why does that matter? Start worrying about what really matters. And again, we don't have to be economists with this stuff. We just have to understand the basics. Okay. There's nothing better than having a set of rules to where we can just follow it, just like a checklist. It's like an airplane pilot. They have a checklist. They have to go through line by line every day before they fly that plane. If we can do that on here at a glance on a one-pager, guys, you can't beat that. Okay. Otherwise, you got to go to all these different websites. And of course, Nick has all the best links attached to all this data to where it's coming straight from the horse's mouth. Okay. Rather than going through about 16 different fundamental indicators we have here, couple sentiment, couple technical, rather than doing all that, we just take a quick look at a glance, give a simple scoring system, and utilize that as a bias. That's it. This is our bias. Edgefinder is not designed to say, hey, CAD Swiss is the most bearish asset. Go out and smash the short button, the sell button. That's not what it's saying. Okay. This is basically taking out 2/3 of our work if we're just looking at analysis. The other third is the technicals. Okay. So we go out, find our chart, whatever you guys' strategy is. This gives us permission. That's why I kind of jokingly say that the Edgefinder is my boss. Okay. I do what it tells me to. It's very rare that I'll buy or sell something in that -4 to +4 range. Sometimes I'll see something, but not too often. I have made a few trades in that range, but I try not to because this is our highest probabilities, guys. So yeah, I'm glad to hear you that it's helping you out. Did you start tanning? I got into it for about 2.5 weeks and I got kind of lazy. So yeah, I got to start getting back into it because I have a pool party this Saturday. I'll probably be the whitest one there. Oh well. But anyway, yeah, I need a tan. I need a tan bad. It's not pretty, guys. Okay. I got into the hot tub the other night, but it was dark. Had a whole bunch of people there. It was pretty fun. So yeah, I'll probably have a sunburn on that note when I come in on Monday because I'm stubborn and I don't know how to use sunblock. So yeah, look out for that. Let's see what I look like on Monday. Okay, guys, back to it. As far as a couple other of these items, yeah, just let me know, guys. I still got about 10 minutes. If you have any other tickers or anything, just throw them out there. I'll just start taking a look at a couple of these. Nikkei, New Zealand CAD, which again, we have a thin bullish list right now. It's not anything too extravagant. Now we're getting quite the spike on the Nikkei, just like we are on the equities. Okay. The US equities indexes. I have identified on this, obviously the trend is working well. Okay. You can't beat that as a trend. EMA is pointing upwards. Alligator's mouth is raising to the heavens, higher highs and higher lows. Don't even need the daily chart because everything looks great. 4-hour time frame wise, did we have any decent pullbacks? Well, we had quite the pullback over here, but price never revisited, or at least it hasn't yet. You push up, you get another fair market value area. But what I like about this is you had a new discount created right below. A new place, guys, just barely ahead of this former resistance. You could call it resistance to support. You might as well. But it technically didn't touch it. So this was kind of created out in cyberspace. Okay. Whenever I say cyberspace, I mean, it didn't really create itself. Okay. Well, if you look at it on a 1 hour, I guess that changes things. You did have a zone of demand over here. I just didn't see it. Look at that. All right. I didn't see it. There's a zone of demand. What happened? What happened? Bounced in, collected unfilled orders, pushed away. Okay. So now that I see that, I'll be a little more careful about this zone because it didn't create itself. But at the end of the day, it is still a form of resistance, turn support. So I'll still keep an eye on it. Just might be a little careful on the risk. Okay. So that is a spot that pushed away, gapped away, pushed up, broke some highs. It didn't do it immediately. It did get a little lazier right here when we reached this high point. So that's another tiny little red flag to me. So let's see what else we got. We go, we get another big drop. We get another basing, another push up. Did this demand zone form from bouncing into another demand zone? Hold on, let's go to 4 hour. I would say that the difference is, yes, it technically bounced in, but that zone got touched. So that zone is mitigated, guys, which means I can color it light green because it's really irrelevant in my opinion. I only use the zone one time. If it's been touched once, even if it's only been touched a tiny, tiny bit, like you see here, I personally stay away from them. But at the end of the day, it did still kind of work. Okay. We did get a bounce here. Obviously, this is our newest impulse leg on a 4-hour chart. Right here. Swing low, swing high. Current bullish pulse leg. Where is my strength? Where's my underlying strength in here, guys? Well, obviously, there is a 4-hour zone at the very bottom, the very beginning of this uptrend. So I definitely want to keep an eye on that. It looks like a little higher on a smaller time frame. I drew up another one. This is probably too small of a time frame. Let's go take a look anyway. 15. Yeah, I think that was a 5-minute. 10-minute, actually. 10-minute, yeah. So I did draw up this little dinky 10-minute. Now, guys, I wouldn't trust this no further than I could throw it because we're starting to get into tiny ranges. At this point, we're very high on the curve. And I personally don't do a ton of short time frame, 5-minute, 10-minute, intraday type scalp trading. I just don't do it. Now, the same concepts work with supply and demand. It's just not as automatic. It's not as good, guys. I would like to see if that could give us a little bit of a bounce, break a structure, and then maybe we turn around for a possible buy. I would not buy this just because it touched the zone. It's got to jump through a few hoops for me. Maybe we get another demand zone. You guys see me draw this periodically. Maybe we get another demand zone and a break a structure like this after we break this leg, where this is our new small time frame impulse leg. If we get a break, well, that's half my worries right there. Now maybe I can take a small position for the other half of that question on a zone of demand, a newly created zone of demand on a smaller time frame, 5-minute, 3-minute. Guys, again, we're starting to get into the scalping, so it's just a little sketchier. That would probably be my play on this, but that's only if I get this picture, this exact picture. That's the only way I take this short-term, very narrow range demand zone trade. Okay, Euro, Aussie, Pound, Kiwi. Euro, Aussie, Pound, Kiwi. Pound Kiwi is a -8. Euro, Aussie, I don't see. So we got a neutral list item there. Let's start with the Pound Kiwi since that's the one giving us a really nice bearish signal. Daily on the right. Got a zone of demand at the top. That's a daily. You can see I got a little green, little red box inside. That's going to be my smaller time frame confluence right here. So still a little ways away. I've already pretty well drawn up what I would like to see. But again, guys, by the time if price goes up that high, our alligator's mouth is starting to turn the other way. So whenever I see the alligator's mouth, talking about my EMAs, when I start to see it curl up like this, where it's starting to close his mouth, that makes me kind of question or second guess the zone a little bit because, and the reason is, okay, it's one thing to say this, but it's another thing to explain why. The reason is because, well, number one, we bounced off another zone of demand. That's not the big issue. The big issue is we could possibly start creating a new upwards trend. New upwards trend, okay? And I like to start on some smaller time frames to see how this is working. Low point. You could call this a high. You could maybe call this another low, another high. So that's the question I have. It just starts getting to be a little bit of a counter trend look at that point. So I don't know. I'll still take the trade. Again, this would just be another one. This would just be another one where I would just cut the risk a little bit. Tiptoe in, because about everything else looks good. You can't argue with the edge finder because it's giving us a really strong bearish signal. And that's a very sexy looking confluence of zones right there. That broke structure. So that by definition is our impulse leg, or bearish impulse leg, right? Bearish impulse leg. Where is my underlying strength in that bearish impulse leg? Highest probability is as close to the origin as possible. It just so happens the origin has a daily and a 4-hour confluence, which is my favorite of all time. So that right there is where I'd be interested. That 2.30 area specifically, because that is the proximal line of the 4-hour zone. And then you got the distal line of the 4-hour zone a little higher, 230.40. So for me, a take profit would encompass the daily. I'm sorry, stop loss, guys. A stop loss for me would encompass the daily. Few ticks, few pips above that. A really aggressive stop loss would be just ahead of the 4-hour zone, but it's only a handful of more pips, guys. I like to err on the side of caution, stay a little conservative any chance I get. And then you got an easy take profit. It's way down here. Okay. So that's what I would be looking at pound Kiwi wise. Again, guys, not financial advice, but that's what I would be looking at. Euro Aussie. Let's take a quick look from a technical aspect for you there. Double bottom on the daily. The daily created a new bullish impulse leg on a smaller time frame. So whether bearish or bullish biased on this, I would still need to see a break of that impulse leg, whether it's the top side or the bottom side, for me to be excited about hopping in. I would either need to see a break of that impulse leg structure up and then a retrace for buys, or a break lower if I had a bearish bias. I don't have either bias right now. Okay. But that, to me, all this nonsense in the middle creates a little bit of a retail chop fest. Okay. This is where we start looking at our curve analysis. Swing low, swing high. Where is a structure? Now, yes, if you're looking at smaller time frames, then you've got a pretty decent spot down here. In fact, you see where I drew up a couple zones, a zone confluence. We've touched the daily, but I would be more interested, if I wanted to be aggressive and buy this, I would be more aggressive and wait for the 4-hour. Talk about this here, let's do this. These candles right here. Right here. That's what I would be interested in. The volume wasn't the greatest, so that is a red flag. Okay. But this is pretty well efficient down through here. There's no gaps. This really kind of represents the first gap from here to here. So that's the first inefficiency I see. But again, guys, me personally, the daily's not painting a very pretty picture. The daily is just saying, why do I have so many moving averages on here? The daily is just sideways puke. Okay. So that's the way I see Euro Aussie. Let's break that structure up here first. If I want to attempt a buys, meaning break structure, close, retrace to a zone of demand for a buy. I know this is obvious, guys, because there's only two ways to do this, but that's just the way I would want to do it. I wouldn't want to do anything unless we got one of these items. I personally would want to see break structure. Okay. Hopefully Edge Finder, if price comes down and gives us this, and if Edge Finder gives us a bearish look, I would obviously look for a retrace to a zone. So probably not as helpful for you on that one as we were the first one, but that's about the best I can do, because I just don't like playing I don't like playing with retail traders. I want to trade where the banks are. And between those white lines, it's not really my thing. Not really my thing. All right, ladies and gents, looks like I'm about out of time. So with that, Governor Bullock flaps his lips midnight my time. So that'll be early morning for you guys over in Europe. Bailey's going to speak again a little later on. Lip flapping sessions galore. And then get ready for Friday. Get ready for this report right here. Okay. That's going to be the hot ticket. They're projected to drop. Overall, the labor market here in the U.S. is split. Okay, you got half the reports favoring the bull. You got half the reports exceeding expectations. You got the other half missing expectations down here for the most part. Oh, well, I guess we did have a change. Oh, that's right. We did have the ADP number. So that ADP number actually changed. So never mind. We're a little bit on the bullish side of things. We're at 70%. We are now in my favorite spot when it comes to the currency strength, which it's not quite updated yet, but yeah, 60 or higher, I actively want to start buying that currency. 40 or lower, I actively want to search for ways to short that currency. That 40 to 60 range for me personally, guys, that's just the way I see it. That 40 to 60 range it's like me. It's just like I don't really have a bias. Now, obviously, we still have to factor in the sentiment and the technicals and things of that nature, what the Edge Finder covers. But that's really where I would start my analysis is, hey, am I getting a clear fundamentally bearish or bullish currency? If so, great. Let's go tack on the smart money, dumb money relationship, the technicals, and find a place to trade. Ladies and gents, that's all I got for you today. Hope you have a wonderful day. I've got to go do an interview of somebody in Ireland shortly. So for a podcast, and gonna be a busy day for me. So I'll let you know how tomorrow goes with the pound dollar and see if I can somehow find some time to find another trade for you guys. So, but at the end of the day, we don't want to push it. We want to let things come to us. Okay. Price action has to jump through our hoops, not the other way around. Take care. Stay safe. We'll talk to you tomorrow.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.